Hi, and welcome to Venture and Capital, round 2. So, what is better than having one full day of innovative companies, business talks, and panel sessions? Of course, it's having 2. So, the reason why we've done this is because we had such great, response to day 1 that we knew there was so much more content that we wanted to get across as part of this. As I said, our worlds are, everyone says it, our worlds are consistently changing, and so what we're trying to do is we're trying to make sure we make this as relevant for you right now. When we've surveyed our investor subscribers and our client subscribers, they've been asking for this type of content. So we are delivering it to you. More than that, there is so many brilliant, innovative companies coming that are basically excelling in this period. We want to make sure that we provide the platform for you and for them to engage and interact. So this is why Venture and Capital Day 2 is now available for you. So let's just kick off with the first part. Firstly, I just want to say a big thank you to AusBiz for being our partner and for helping us facilitate this. I love everything that Kylie and her team have done on hosting their channel. I said you'll also get, if you want to see this also be featured on AusBiz, you'll have that opportunity next week. And I want to say congratulations to them and their continued growth. Now, what we're going to be covering as part of the event is that we're going to be having a whole bunch of innovative companies participate. This time we're going to be having 10. Now, what's really cool is that the sectors that are really in high demand at the moment, going across technology, going across healthcare, going across cybersecurity, each of those areas get featured as part of our event. And you'll hear from each of the CEOs, you'll have the opportunity to engage with them directly via Crisp. More than that, you can actually engage with them during the presentation as well. So, now I know you're typically a shy bunch. I know you're typically reluctant to communicate, but we will facilitate it. More than that, during the actual event, we'll be facilitating by posting the LinkedIn profile of the CEO, and we'll also be posting a link to the actual company as well during their presentation. So, whether you're looking at this on the Crisp stream page or you're looking at this on YouTube, we'll be making sure you'll be able to engage with the innovative companies directly. Now, we're also going to be holding some unique sessions because, as I said, we know that this has been a key area for you. Whether you're an investor into a company or whether you have your own business, you're always looking for ways to add value to the company which you're participating with. So what we've done is we've put together some business talk in areas which are absolutely relevant to you right now. So the key areas that we're looking at, firstly is capital raising, and the investment process is an important area and a high priority area for companies. So Dan is going to be talking about that. I've been working with Dan now for a few months. Fantastic mind, very diligent, very thorough. And what I love about him is he's got that ability to describe things in a certain way which give you your own sort of light bulb moment to help you sort of enhance something that you're already thinking about or you may not have thought about already. So look out for that session. Jason, cannot tell you how much I love the Cake Equity guys. He's going to be going through how you can actually help facilitate with with better employee share options. We've got Mitch Eady who's going to be talking about sort of the different government incentives and the R&D programs which you're able to take advantage of, because we know that's just such an important area at the moment. Is getting cash in the door and getting access to capital is always important. And then James Parnwell is going to be talking about digital marketing at the moment. Given that we're all sort of mostly focused everything online, the digital marketing element has become more and more of a priority for all of us in our businesses, including us here at Wholesale Investor. Then what we're going to be doing is we're going to get Dan to then host the next session, which is really about giving you the opportunity to understand what's happening in international markets from India, Middle East, Canada, China, and from their perspective. I said everything that we do is trying to create opportunities and create cross-border opportunities. So in that panel session, they're going to be giving you some insights into what's happening into each of those regions, so you can understand that, whether it be on behalf of your investee company or whether it's for you yourself directly. Now, as I mentioned, we've got lots of different ways for you to engage through the platform. We have set up the CRISP Venture and Capital Day 2 page, which you would have received an email about this morning. You can engage with the companies directly via that page. Also, if you decide to watch it on YouTube, which we know some of you do, in the comments section, we will be posting the LinkedIn profiles for each of the people that are presenting, and also we'll be posting their deal rooms as well. We just want to make it as simple as possible. What we highly recommend is when you go into their rooms, obviously request access, and then from there you can connect directly and communicate directly with the CEO, right? Or you can obviously do that via their LinkedIn. All this is just trying to facilitate that initial introduction, and then what we encourage you to do is set up another meeting, or set up a Zoom meeting or a Google Meet with the CEOs directly following our discussions. So, next part. This is how we build our ecosystem. The first video that we did, the first Venture and Capital Day 1, has had already over 1,500 views, right? I think there was 1,200 on our the stream page. Sorry, 1,200 on YouTube, and then more on our stream page. We are hoping to absolutely smash that. So anyone that's relevant to your networks, please invite them to come watch the page, to view the actual presentations, and also to engage with the companies. We know that each of you have within your networks 10 to 15 people that are relevant to this space. Please come and invite them. We make it free so that we can keep on building. I absolutely love that we've gone from hosting 200, 300 person events to now having 1,500 plus views of our different showcases. We want to keep on expanding that more and more, and we rely on you as part of our ecosystem to make that happen. So the next thing I'll say to you is, welcome to Venture and Capital Day 2. Enjoy the presentations, enjoy meeting the companies that are participating, and we look forward to connecting with you afterwards.
Our first presenter today is MediKane, a growth business in the healthcare sector. They are already in the market with 2 products and have another 3 launching in 2020. Here to talk further about their plant-based and natural products is CEO Rod Lewis.
Hi, thank you for the opportunity to present. I'm presenting MediKane, a product that produces and sells natural products into the health markets, both medicinal and also straight health, primarily targeting diabetes initially, and also hospital intestinal health, elimination of post-operative constipation. So the first range of products are for people wanting to manage blood sugar levels. Our biggest market is the product for type 2 diabetes, also applicable for people living with pre-diabetes and gestational diabetes. We have a product for post-operative patient care. It's been used here and in the US, demonstrated effectiveness for post-operative, but also it will deal with chronic constipation as well. And all of the products have now been demonstrated to be able to improve immunity health, or the strength of the immune system. It reduces systemic inflammation, which is part of the immunity. That's been demonstrated in clinical evidence, but also in Macquarie University. And we believe, the best prebiotic in Australia. Natural product and feeds the microbiome. So what are we looking for? We're looking to raise $2.5 million. We've started the raise. It's progressively filling, and the milestones to achieve in the next 18 months. Turnover of $10 million, enter the Asian and US markets. We're in fact already in the US with an office, and Asia with a distributor, and build up to significant numbers of customers to give the return on funds we're looking for. Diabetes is the 7th leading cause of death globally, and it's growing, as most of us are aware. Fortunately for us, there's no product that fully treats diabetes. I'll come back to it. But importantly, in these days, where we're thinking viruses, people living with diabetes have a much lower survival rate from viral infection. That work came from WHO since February. Drugs that do help people live with diabetes today are effective, but their effectiveness decreases over time, require higher doses, and some indeed have side effects. Importantly, the healthcare costs are significantly higher when supporting someone living with diabetes, which is part of our sales approach to governments, obviously. Significant market and growing, 463 million people right now, estimated by the International Diabetes Federation. Most of those people are living with type 2 diabetes, although type 1 is also a target for us. Importantly, the number of people who are pre-diabetic is about the same size, a significant market, and our product has been proven ideal as a preventative. And people, ladies who get pregnant, 1 in 20 do get gestational diabetes, which can affect them and their baby. So talking about the market, the biggest single drug is metformin. It's been around 100 years, in fact, plant-based itself originally, and we compare fairly well. So metformin is the go-to drug when people are diagnosed, and it treats 36% of the population effectively, and then people move on to higher doses and other drugs, whereas ours treats 80%, in fact, well over. Metformin is a very good drug, but it's not recommended for people with kidney disease, which is a problem that people living with diabetes get frequently. And ours is completely safe and, in fact, shown to be helpful in that situation. In terms of performance, metformin reduces the blood sugar levels, the average blood sugar, by 1%, and ours does that and a little bit more. So we compete well, or compare well, to the leading drug. Now, we've got a case study. The gentleman had diabetes for 25 years when we met him, and within weeks of using our product, his blood sugar levels went down from 8.4, as you can see, to 6.4. The measure was HbA1c. It's the global gold standard for diabetes, and he's remained completely in control since then. Not only did it reduce his blood sugar levels, but it reduced insulin use. Now, that's important for a number of reasons. Obviously, it's an opportunity for us to go to governments in Australia, where insulin is part of the health scheme, but in the US, it's not. So there are people in the US today not getting any treatment because they can't afford insulin, but they can afford ours. Let's move to constipation. So constipation is caused by the painkillers, opioid analgesics, that is used around the world in surgical procedures. Excellent products, but they do cause constipation in most people. Huge number of emissions that are relevant to our market, and importantly, our product has been through 2 clinical trials on this product in Melbourne, and of the people that were still constipated after all other treatments were used, 88% were relieved of constipation with our product, and within days. So this increases patient flow through, bed availability. We've got multiple channels to market, all of them actively in use and being proven time and time again now. We've got medical distributor relationships here in the US for distributors to take into hospitals and clinics. And we've got a fairly fast growing white label business in different parts of the world. In terms of the effectiveness of our marketing so far, we've managed to double sales each of the last few years, and our investment on marketing in digital, we've got a digital agency that helps us, we get $5.20 return revenue for each dollar invested in marketing, an excellent return, particularly with 40% of first-time users become long-term customers. Without talking in detail about the science, although it's available to any interested investors, we've got 3 independently peer-reviewed clinical trials completed. We've got extensive work at the Royal North Shore Hospital on preclinical work, looking at pancreatic repair and other things. We've got patents, and we've established modes of action, which is important. critically important when you're selling a medical type product or a health product into the medical industry. Revenues, next year we're targeting $3.5 million revenue and doubling that in the following year and then increasing thereafter. Why do we believe we can do that? Well, no product treats diabetes, literally, that's a fact. And we've got very strong evidence that ours does, and it is safe, and a growing number of people wanting safe evidence-based products. From a health point of view, preventative treatments are increasingly important, particularly in the US, with the very high cost of health cover over there. So we have every reason to be able to sell both directly and through distributors, hospitals and retail. We've got high margins, they will increase as we grow volume. And importantly, the market penetrations for all of these revenue numbers are tiny. Wherever we've been able to address a market, we've managed to get a significant market penetration. And this is all it needs on average over the long term. So our products, we have the only effective treatment. Our treatment for constipation worked in 88% of cases when others didn't, and a growing white label range. Our channels are proven and extensive here in the US and now in Asia and about to be in the UK, Europe. Customer stickiness is very high and we have high margins. Good, robust science available to investors here to look at and demonstrated in both Australian and US hospitals. Very big markets and the business is readily scalable. Very readily scalable. Importantly, on top of that, we've got a very experienced and committed team, excellent networks from the International Diabetes Federation and others, and we are ready to grow with, and we invite your interest and investment. Please log on to the CRISP platform and check us out and or give myself a call or one of the team. Many thanks for your time.
Thank you, Rod. Our next presenter today is Global Study Partners, a unique B2B edtech business designed to empower students with unparalleled access to overseas study options. Here to talk further about this opportunity is CEO Elaine Starkey.
Education is transformational, it changes lives, but very often students are denied access to the right options when they choose to study overseas. We're providing access to students to some of the top universities in the world. Global Study Partners is an EdTech B2B booking platform for international student recruitment. It's an online marketplace that transforms lives through education. We provide access, expertise, platform and services needed to empower students to study anywhere in the world. And really our aim is to empower students wherever they're based anywhere in the world to choose a course and a university to study anywhere in the world. So very much like an Expedia for travel, we're providing an education solution. So today we're operating in multiple source markets overseas. Our head office is in Australia, and we have operations in India, throughout India actually, and Vietnam, Philippines, and recently we've opened operations in Pakistan, Brazil, and Sri Lanka and Bangladesh. And we have started our journey in Nepal actually, and we're recruiting students into multiple destination markets, Australia being our #1 study destination, but we're also recruiting students into Ireland, into UK, Canada, and multiple other study destinations. In FY20, our tuition fees that we placed in universities, mainly in Australia, was over 27 million. We have 650 contracted recruitment partners from all over the world on our platform. And in the last 6 months alone, over 70 or 80 of those have signed up on our platform. So we've had a record growth in recruitment partners onboarding in our platform. We're recruiting students from 10 different source markets into 6 different destination markets. And we have over 30,000 courses profiled on our platform. We're contracted with 448 universities and schools, and some of the top ranked in the world. So we're and every single university to place a student, you need to have a contract in place with them. So where the journey began was in Nepal nearly 6 years ago now with my co-founder, who was an international student, and really a picture paints 1,000 words. 80% of students come to Australia and use an education agent, or they travel around the world and use an education agent. And this is what it looks like. In one street in Kathmandu alone, there was over 1,000 education agents. And I thought, wow, this is a market that is like a cottage industry. It's fragmented, it's broken, it lacks transparency, and it lacks choice and stock. And unfortunately, students get a very poor outcome, and parents make huge sacrifices to send their students overseas. So we're addressing the supply and demand problem and addressing the transparency and connectivity. And we're providing these recruitment partners, rather than competing with them, we're providing them with unparalleled access to course stock to universities worldwide. Today, we're in the top 3% of global representation agreements, and we provide a unique, a scalable platform for our recruitment partners. We also share the revenue with them across the entire student life cycle. So not only can they search and compare through courses in universities and through different study destinations, but they can also tap into insurance, homestay, banking, and all our service providers, internships, jobs. There's huge opportunity in this marketplace. So 10 years ago, the market was worth $100 billion. Today, it's worth $320 billion, and it's one of the fastest growing industries in the world. It's forecast to grow to $490 billion by 2025, which may come off a bit because of COVID, but certainly the demand isn't going anywhere. Students really want to study overseas. They want to study in English-speaking study destinations, and they want safe environments. And Australia provides that, and so do other multiple study destinations. Today, the market leader in the business has less than 3% of the global market, so it's a huge, enormous opportunity. Our technology is live, it's complete, it's scalable, it's cloud-based, it's workflow-enabled, and it provides a search, compare, shortlist and apply course booking engine, which really saves the local recruitment partners hours and hours of research when they're placing a student to study in a university overseas. And it certainly is process driven. We represent some fabulous brand name universities, some of the top in Australia, some of the top in the world. And we also have partners like Allianz, NIB, Homestay, Australian Homestay Network, accommodation platforms, all to enrich and empower the student experience, because our whole model really is about providing a better student experience for the international student. We're raising $4 million, of which $2 million is committed. $500,000 of that has come from our existing shareholders, $1.5 million from Regal as our cornerstone investor. And we're raising the balance of $2 million to really grow and expand an absolutely proven business model. Just a little bit about our traction and momentum to date. In FY18, we started growing the demand side of the business, which was the student side. So we placed 65 students in for a sales value of $221,000. In FY19, that increased to 338 students, sales value of $1.1 million. And in 2020, the toughest year ever in international education, we placed over 700 students with a sales value of $2.28 million. And that's going to grow aggressively in 2021 and 22. 2022, we see 5,500 students with an 18.7 million sales value, and 2023, 12,000 students with a 40 million sales value. And just putting this into perspective, there's over 500,000 new students studying in Australia alone every year. So we're just looking at a small proportion of the market for a huge sales value and a huge revenue. How it works is a university pays us a placement fee for every student placed. The average placement fee is $3,400, and we share that with our channel. On top of this, we get bonuses from our aggregator bonuses, basically from our university partners on volumes, which we're ticking very nicely at the moment. All aspects of our business is growing. if you see on the right-hand side, our sales have grown, our revenue has grown, and it's a very traditional model. Every time we've taken on a new BDM, for example, in India, a BDM costs $17,500. A BDM returns about $175,000. So it's a highly leveraged 10 times return on a channel partner model, where a BDM drives some students and manages some channel partners. And when we took on our first BDM, we found our second BDM, we found the same multiplier effect in different markets, in different countries, across different jurisdictions. So we're very excited about the growth in the company. And this is, without a doubt, a very challenging time, but the demand isn't going away. We're up 80% year on year on the previous year in the most challenging year in international education. Our growth strategy, look, we really want to be, from day one, we've always thought we want to be in all source markets and all destination markets and the number one player in the world. And we want to expand our geographic footprint in those source and destination countries by building out our channel development and our technology. Our executive team, I'm the CEO and founder of the business, started 6 years ago, but I am an educator by background, a maths teacher, and that's where I started my life, built a global international publishing company and started on this journey 6 years ago. I'm very passionate about education, as is our chairman and our COO, who started the journey with me 6 years ago and really have helped build the business. Jim has a fabulous, he's one of the top IP lawyers in Australia and also a technology background. Kevin came on board me very early stage. We put together the business model, changed it. He's a strong technology and funds management background. 3 new board members have joined recently. Jeff Carey, with 25 years experience in the equities market, who really has the experience to take us to a listing. Tim Prale, who has the deep experience in EdTech, fantastic asset, young, dynamic, and very deep experience in international education. Chris Saxon, a career as principal of Baker McKenzie and was previously past chairman of Baker McKenzie. And Victor Zhang, one of our largest shareholders, he's the chairman of Sapien Ventures. John McParland, I won't go through our whole team, but they're all a fabulous, dynamic and very diverse team. But John has 25 years plus experience in international education, having been working at director level in many universities, but top branded universities like Trinity College Dublin and Monash University, Bond University. Vienne, Marcel, Annie, with just such a fabulous, dynamic team. And look, I'll just finish off on a note. Just somebody said to me a couple of weeks ago, they said, wow, a few of university partners said, this is going to be a real game changer in international student recruitment. And I just said, look, to me and our team, it's way more of a game changer. It's a life changer, because really education does change lives, and giving students access to the right information transforms their lives. So thank you very much for your time today. And please ask any questions.
Thank you, Elaine. Our next presenter today is Sanderson Partners, Australian film and television creators to provide financing, production, distribution and marketing services on the global stage. Here to talk further about their vision and mission is CEO Alex Sanderson.
Hi there, my name's Alex Sanderson. I'm the founder, chairman and CEO of Sanderson Partners, the motion pictures private equity firm, and I'm here today to discuss with you an investment opportunity with my company, and I thank you for viewing the opportunity. So Sanderson Partners works with Australian film and television creators to provide financing, production, distribution and marketing services to compete on an international level. Our company purpose is to grow the Australian film industry and to compete on an international level. So the problem with the Australian film industry is that the funding is actually governed by the Australian federal government. So while other countries can spend anywhere from 20 million to 200 million plus in private equity in film, Australia invests an average of 1 million to 10 million of taxpayers' money, on the basis that the film is Australian themed and attracts tourism, but the films are not commercial. Australia releases the least amount of films per year at 35, while other countries release up to 100. I decided to add in a case study for James Wan. It's all too common that Australian filmmakers end up going overseas to try their opportunities there because there are more, and James Wan had done this as well. So James Wan tried accessing funding in Australia for 10 years and was rejected. He decided to move to America, where he was able to access $1 million for his first film, and that film grossed $100 million worldwide. Today, he has made America $1.8 billion. That could have been Australia's money. Milestones achieved in 12 months for Sanderson Partners. We've had 700 client signups between our website, Facebook, and Instagram in 4 months. Interested clients are in America, Austria, China, India, and Australia. And potential clients of Sanderson Partners are in discussions with or have secured A-list celebrities, including Denzel Washington, the Hemsworth brothers, and Arnold Schwarzenegger for their films. Potential clients are also working with Academy Award-winning directors and some of the biggest distribution companies and streaming platforms. What we hope to achieve in 12 months is partner with an Australian actor for a brand ambassador role, build awareness in the market, grow the number of employees, build a patented business intelligence system that assists in our investments, and invest in clients and films. The potential for investors is that you can own up to 30% of Sanderson and Partners shares, invest and contribute to Australia becoming a leader in the international film market, attend red carpet events and premieres, come on set and meet clients and celebrities, and attend functions with celebrities. Market opportunity. Sanderson and Partners operates in a niche market that doesn't have many competitors. Australia's entertainment industry is expected to grow to $43.7 billion by 2021 at a compound annual rate of 2.1%. And as a private investment company, we are more flexible in what we can invest in than Screen Australia. Distribution of funds will be to 3 main areas. First one being investments into our clients. Second is salaries, and third, business expenses. We have a team for our board of directors, which include Marcelo Pinto, myself, and Monica Lama. Marcelo holds a Bachelor of Commerce, Bachelor of Arts, Master of Political Economy from Sydney University. He is presently the director of 2 private equity funds. He has a history of success as a serial entrepreneur, having established and operated multiple businesses, and has extensive experience in implementing the systems and processes required for companies to succeed. Marcelo is a seasoned finance professional with more than 10 years of experience in investing in the stock market. Prior to starting his own private equity fund, he worked at JP Morgan and Deutsche Bank in Singapore as an investment banker. He is author of multiple books and articles and regularly writes for Motley Fool, Seeking Alpha, Off Wall Street, and Our Pace. Monica is a practicing lawyer with over 15 years experience, with the area of expertise being complex international property settlements, binding financial agreements, corporate law with an emphasis on business restructuring and dissolution, and property law with an expertise being on feasibility studies in property developments. She is a principal of Lama Family Lawyers and co-director of the international law firm Pinto Lama Lawyers and Advisors, with offices in Australia and Dubai. Monica is also a panel judge in the Swiss International Negotiation Competition, member of the Law Society of New South Wales, member of the Law Council of Australia, fellow of the College of Law, member of Doyle's Law Asia, and has been a member of the Family Law Committee of the Law Society. She holds a Bachelor of Science, Bachelor of Laws, and a Master in Applied Law. And myself. I first started my corporate job at the age of 16 in procurement contracts, when my responsibilities included assisting the team in tenders, negotiations, and contract management of up to the value of $300,000. During this time, I also sat on my school's board, where I helped the board understand what students were wanting and needing, and helped shape the vision of the school for future. And I also sat on as the chair of the ACT Youth Advisory Committee. Once completing my Cert 4, I then went on to assist startups in better understanding their market, their consumers, competitors, and market trends, HR and employee relations, investor relations, day-to-day operations, and revenue growing. So I now focus solely on Sanderson and Partners, which I founded, and I also am expanding my knowledge in studying a diploma with the goal of obtaining an MBA and in future a doctorate of business. I also have a team of advisors, which include Andrina Finley and Paul Hotz. Andrina Finley is the founder and managing director of Screen ABC. She has won a BAFTA and a Logie and has been nominated for several AFI awards. Her films have been screened at many international film festivals, including Cannes' main competition, and has been released in all major territories. She has been a drama investment manager at the Film Finance Corporation and head of producing at Afters. Andrina's husband is Al Clark, an award-winning film producer and former board member of our competitor Screen Australia. He was also CEO of Virgin Films and reported directly to Richard Branson, whom they still keep in contact with to this day. Paul Hotz is a well-respected business founder and entrepreneur, board director and business advisor with 40 years plus experience in international career in fashion, retail, supply chain management and manufacturing. He founded and grew to Drew Fashions in 1984 and grew it to a $100 million turnover manufacturer and distributor of women's, men's and children's clothing. He has served on the board of directors for Marks, Diesel International, Style HQ, and have been engaged as CEO, business mentor, and board advisor to early stage and high potential businesses. He continues to have an active involvement in the fashion industry, where he acts as a consultant to Style HQ, a large fashion distributor who imports upmarket fashion labels from Europe and Asia. We also have a number of preferred supply agreements with a number of companies to not only offer Sanderson Partners their services, but also our clients to achieve the best possible results for their films. These include with Cleander IT, which will provide our company and our clients with cybersecurity services to protect and secure company data and money from attacks. They'll also provide services such as cloud, networking, and software and hardware. They're currently working with some big companies, including Commonwealth Bank and Cisco. Our other company that we're working with is Spirit Creative Agency, which will provide our company and our clients with marketing, advertising, events management, and PR services to boost awareness. Spirit has worked with the following companies: Johnson & Johnson, Gucci, and Pratt Industries. And we also are working with Webtile, which will provide our clients with IT, website development to give them a presence online. Thank you for joining me today to understand my company, what we do, and our investment opportunity. If you're looking for any more information, you can follow my platform and get some more information off them and discuss that with me further. And I look forward to discussing with you further opportunities with our company.
Thank you, Alex. For our business talks today, please welcome Dan Burykin. Dan is co-founder and board member of several businesses, including mobile VAS provider Game Dev Studios, as well as a managing partner of the Sydney-based advisory and consulting company Fastlane Solutions. I caught up with Dan to discuss the challenges in pitching and fundraising.
Hi everyone, welcome to Venture and Capital. I am here with Dan Burykin, who has joined us today. Dan has incredible experience not only as an investor, but also as a co-founder. He also sits on many boards. I guess what we want to discuss today is a very common topic of how to be investor ready, how to have a good pitch deck. What is it that investors are looking at and what is crucial in a company setup? Then you've come across a lot of pitch decks as an investor. What do you think is really important that sometimes founders might be missing or maybe not including in their presentations? Please talk us through any findings.
Absolutely, Marta. It is great to be on board with Wholesale Investor. And I'm Dan Burykin. I have a number of years of different experience involved as a founder and as an investor in different companies. Recently, as a director and managing partner of Fastlane Solutions in Sydney. I believe giving back your experience is going to make the community better, and making the community better will make more opportunities for everyone in this community. And with this note, I collected some of these wisdoms from the past, not just as an investor, but also as a founder myself. And I just want to give 5+1 points for everyone to think about, starting with the ones that I call unique misconception. Quite often we come across this word unique in many pitch documents and about every product and every company that I came across, pretty much. It is certainly well and important to have unique sales proposition defined, but when it is overused and abused many ways, it is sending a red signal to a point that it makes you wonder whether it is really so, whether the people who were putting the pitch document or thinking about the business actually had time to spend on doing the market research. Or maybe it is unique because no one wants it. It's also unique, right? Or maybe it's something that is completely out of this world, like a lifesaver from Star Trek. Well, having a clearly defined commercial model, including scaling, it is another important point, and quite often is missing in the description of your business. It is really important to show that you know how you're going to scale your business, how it will scale, not only in the first few months, but also after that, going from not only from 0 to 1, from 1 to 1 million. It is about customer support, it is about litigation points, it's about infrastructure and all these things. Quite often, this thinking is just missing or not clearly defined in the pitch documents. Having a business roadmap or not having one is a question. We, of course, appreciate that we are living in a time of change and everything is changing and will change again tomorrow. But not having a business plan is sending, again, a wrong signal. It says that you are not anticipating, you don't know how you're going to change or how you need to change in the future. So this is another one. Also, when you come across the product that is great and you get to the point where people are describing their market or their target market, you can start seeing a lot of general words about megatrends. Data consumption is growing, cloud consumption is growing, space industry is going to boom, artificial intelligence is going to make our life better. Of course they will, but how is that relevant to what your business is doing? So having this relevant, narrow perspective is very important and quite often is missing. Now, we all know that investors do care about their money and returns. And we need to meet them at the table and talk and level with them on this aspect as well. Having a mature or at least thought through financial structure, how you're going to manage their capital, is going to tell them that you're going to take care of them and their money, right? And not just at the moment when you are taking their money in, but also through the life cycle of their money or these investors with you in your business. And the last one is over-dependency on grant money. It is good to have some support. It is certainly great, but investors are looking that the business is going to be healthy, that it can stand on their legs on its own. It's not a secret that many investors and many investment institutes have this as a requirement, and I mean the balanced PP, private and public funding. So those are the 6 things that I thought would be helpful, and I thought I'll bring to the community today. I hope it really helps.
Thank you, Dan, definitely. We are now going to move to a YouTube chat, so if you have any questions to Dan, please type that out. And thank you so much, Dan, for participation.
Thank you, Martha.
Thank you, Dan. Our next presenter today is Aecus Asia. Their AI-powered SaaS solution, Alicorn, is delivering a cost-effective building inspection solution using autonomous drones. Here to talk further about this opportunity is CEO Aileen Noah and CTO Alan Neo.
Hi, thanks for joining us today. My name is Aileen Neo, CEO of Aecus Asia. Aecus has been in the space of developing IoT solutions for facilities management. Together with my CTO, Alan, we will be presenting our latest innovation, Alicorn. Alicorn is an end-to-end SaaS plus service solution providing autonomous drone with AI-driven building inspection capabilities to improve building safety, property valuation, maintenance, and insurance risks. Before we go into details, I would like to talk about why Alecon will be key in addressing a multi-billion-dollar industry problem. In Australia and Southeast Asia, we've had massive numbers of new builds over the last decade. There are currently 15 million brownfield buildings in this part of the world. To this, there have been increasing instances of building defects and falling debris because of aging buildings, poor materials, rapid construction methods, and harsh environmental conditions, such as fires, earthquakes, flooding, and so on. Right now, the industry is struggling to attain the necessary frequency for building inspections. And this is primarily due to physical and cost constraints, such as the lack of safe and easy access to all parts of the building, even when using scaffolding or sky lifts. New methods of piloted drones are costly, and sifting through hundreds of image captures are both time-consuming and tedious. Surveys have shown that in New South Wales, a building has an average of 16 major defects. And in Singapore, water ingress contributes to 53% of known defects. In my years of facility management, this is a common problem in many countries, and I am passionate about creating the right solution to bridge all gaps. To ensure Alecon will meet industry needs, we established a panel consisting of property owners, facility management, insurers, legal, and aviation subject matter experts. This first-hand insight has enabled us to design a solution that meets current real estate activities. End users want an affordable, safe, and easy-to-use solution. The ability to conduct frequent inspections on a schedule or on demand will help landlords better manage their exposure to risks, public liability, injuries, and avoid loss of lives. Aecus envisions Alecon to be a complete ecosystem. Starting with transactions, a professional surveyor can perform automated building inspections to complement their defect assessments and valuation reports. With major retrofits and repairs, landlords and insurers can utilize Alecon to validate such works and complete the underwriting process. For large-scale leases, pre- and post-lease inspection records can be used to confirm the tenant's reinstatement obligations. In the business-as-usual state, maintenance teams can now perform repeatable inspections and better plan their activities and budgets. Last but not least, we have seen the fires in Australia and earthquakes in Indonesia. Insurers can now access pre- and post-inspection data to facilitate their investigations. Let me explain how the value stream is established. The process starts with Aecus helping clients to secure flight permit approvals, following which we will map autonomous flight plans of the building before performing the initial flight. Captured images and videos will be uploaded to our Aecus AI for processing to identify defects. In addition, Alecon will create 2D and 3D renderings and automatically pinpoint the location of identified defects. This is a unique value add for brownfield buildings which commonly do not have updated drawings. With that, the final report will be made available to users for sharing and collaboration on Alecon. And as you can see, Alecon can generate multiple revenue streams for both services and subscriptions.
Greetings, my name is Alan. As CTO, my mission is to deliver a solution that is extensible, defensible, adaptable, and easily adoptable. Our solution addresses and delivers the whole value chain. Here are our differentiators. Compared with human-piloted drones, autonomous drones minimizes human fallibility with autonomy beyond visual line of sight flights, enables our solution to inspect large-scale buildings and sites. This approach also allows for controlled, repeatable flights that can be easily managed by lesser experienced users, therefore enabling greater adoption. Aecus is presently in coordination with Singapore Aviation Authority to meet regulatory standards. This effort is a key strategy to penetrate other countries like Australia, Thailand, and so on by being approved for autonomous flight. Our AI module is designed to work with any uploaded images to identify defects. In addition, from those images, we will automatically generate 2D and 3D models. Ultimately, all efforts need project management and collaboration activities to be successful. Finally, we want to allow our customers to easily attain our software and services through our online payment module. We estimate the TAM to be 24 billion Singapore dollars or 25 billion Australian dollars. This estimation is based on extremely competitive rates and are below current market drone inspection fees and services. Our go-to-market partnerships will help us onboard approximately 7,000 users over the next 3 years. We expect exponential growth from year 5 onwards. With moderate growth rate projections, we expect to break even in year 3 to 4. We are seeking funding for 1 million Singapore dollars in exchange for 25% equity, as we have established market needs and built an ecosystem with early adopters from property owners to insurers. In year 1, the funds will be channeled towards product development and commercialization to meet demand. In addition, we will perform multiple flight trials. These trials will be carried out in various environments under close engagement with the Singapore Aviation authorities. We plan to soft launch Alicorn in Singapore and currently commence early engagement with CASA to expand into Australia. In year 2, Australia is a key market in our strategic growth. We are finalizing our partnership with Professional Surveyors Body, which will allow us to gain market traction quickly. In addition, we are in partnership discussion with the private sector. We can and will maintain market lead through continuous innovation and product enhancement in Alicorn. In closing, we would like to leave you with some information about us. Eileen has over 15 years in facility management and real estate, and she is familiar with APAC region. Myself, I have over 26 years in building enterprise-grade solutions in retail, financial, government, healthcare, and consulting. In particular, I'm in tune with AR, aerial VR, and AR technology. Thank you for your time and consideration. Feel free to reach out and we'll be happy to answer any questions you may have. Thank you for your time and consideration.
Thank you, guys. Next up to present today is Fulton Phillips, a corporate finance company that specializes in deal origination and also disrupting the asset lending industry in a similar fashion to buy now, pay later providers. Here to speak further about this is Managing Director Fred Witherow.
My name is Fred Witherow and I founded Fulton Phillips almost a year ago after 2 decades in the financial services industry. Fulton Phillips is a private consulting firm formed to create new industry-leading companies. The company brings extensive investment experience across a range of sectors with an understanding of both public and private company structures and requirements. I'm excited to present to you today an opportunity to invest in Fulton Phillips project to disrupt the luxury, commercial and household asset lending space. This Fulton Phillips project aims to develop an innovative fintech platform to exploit gaps in the asset lending sector. Our customer-centric solution will empower consumers to efficiently and discreetly obtain funds to satisfy their financial obligations and unlock financial opportunities. So what is the industry we will disrupt? The pawnbroking industry operates within a niche regulatory scheme that offers substantial commercial opportunity to a fully online solution. However, the online solution is yet to be capitalised on. This pawnbroking niche is beneficial to both lender and borrower alike. The pawnbroking model allows a lender to hold the asset that underwrites the loan, whilst only having to adhere to the requirements of the relevant Pawnbroking Act and thereby avoiding other complex and burdensome financial market regulations. Another key benefit to the model is that because it is an asset-backed loan, the borrower avoids both credit checks and credit reporting. However, for a borrower, walking into a pawn shop is not a discreet or convenient transaction. Through the process of planning how to leverage this niche opportunity into a completely online solution, Fulton Phillips determined that there was a lack of aggregated real-time asset pricing and liquidity information available in the market. This lack of real-time asset pricing is the missing link in the ability for lenders to be able to accurately and confidently assess a loan opportunity and pre-approve it within seconds. Breaking into the pawnbroking industry through an online platform will disrupt the industry and enable an untapped pool of assets to be unlocked for both owners and lenders. Online pawnbroking will transform assets, which have traditionally been considered dead assets, into tangible items that can be used as an efficient and realistic means of obtaining cash quickly. So what exactly is the problem? With Australian unemployment rates predicted to surpass 10% in the coming year, and our new technology paving the way for unprecedented convenience, now is an optimal time to launch a disruptive and convenient platform centred around a new way of helping consumers manage their financial needs and opportunities. To help consumers solve their asset-rich but cash-poor problem requires lenders having all of the required and up-to-date information and data in one efficient engine that allows immediate calculation for a loan offer document. Now let us solve the consumer problem. The problem that we've identified is to deliver a new source and style of lending. Our objective is to provide consumers with funds quickly, conveniently and professionally via a simple online platform in order to meet financial obligations or unlock financial opportunities. We want to provide a fully upfront service where loan amounts, repayment plans, fees and costs are agreed upfront to ensure there are no surprises for consumers. In the midst of economic uncertainty, individuals and small to medium-sized businesses will be seeking shorter approval times and access to faster loans without the strings attached to traditional funding methods. Their very survival could depend on the efficiency to lodge assets and borrow money. With straight-through processing, we'll deliver better borrower experiences. How will Fulton Phillips provide the solution for the B2C lender? A core requirement for the successful deployment of an online lending solution is access to an aggregated real-time asset pricing and liquidity information. Our solution will integrate these inputs and key pricing considerations into a single engine to instantaneously generate loan offer metrics. This solution will disrupt the asset lending industry, and similar technology could be multi-purposed to other industries as well. Here is how we view the market. The consumers of online secured asset lending will be any person or business that requires a loan of around $2,000 or more. The asset or assets they must provide as security must be of an equal and agreed value net of LVR that at least covers the principal loan plus any interest, costs and fees. The market for the engine then is any business or industry that can efficiently use real-time asset pricing, liquidity and other inputs to generate instantaneous offers or solutions to consumers. Fulton Phillips engine will provide a one-stop shop for the lending transaction. At the engine's core, it will provide value and liquidity metrics for the pledged assets so that a lender can immediately make an offer to the owner of the assets. The engine will also incorporate insurance, logistics and other costs into the loan offer pricing so that the offer and subsequent documentation are accurate whilst still subject to the subsequent delivery of the assets into the lender's possession, internal authentication and ultimate acceptance of the final value of the assets by the lender. What is our plan? After 6 months of in-depth analysis and planning, Fulton Phillips is ready to broaden its investor and talent bases. Key execution items have been considered and costed. A formal plan to establish the engine in parallel with the B2C business is in place, and initial key members of the team to deliver the engine have been engaged. In the coming weeks, we'll converse with appropriate investors and partners to fund the development of the engine and the establishment of the B2C business to commence lending to consumers within the current financial year. I'd like to discuss the two teams Fulton Phillips has put together to make this project a success. Firstly, the founding team includes a proven technology director, a proven startup director, as well as a PhD in neural network applications and finance. As you can see, Fulton Phillips has assembled an enviable talent base to deliver into the stated opportunity. Additional details will be made available about key individuals in the Investor IM. How will we deliver the B2C business? Whilst the engine's the key to being able to deliver the stated customer solution, Fulton Phillips has determined that having control of the first B2C business will also be crucial. To be successful in the way we envisage, this business will require branding, marketing, and especially operational excellence. The branding team has had substantial and recognised success in creating an image, terminology, and solution that fits an opportunity. They agree there will need to be a differentiation strategy between this platform and the existing pawnbroking industry. A customer-centric approach around communicating the convenience of the platform without the negative connotations associated with the existing bricks and mortar version of the industry will be pivotal to its success. The marketing team that Fulton Phillips has appointed was responsible for generating hugely successful outcomes for Nimble, Prosper, and Splitit. For Nimble, they reduced customer acquisition by 84% after they created a hyper-tailored user journey. The same marketing team also helped Prosper vastly improve their lead flow and lead cost. They achieved this after careful consumer review that showed potential loan recipients in financial distress would respond very differently to those looking to fund growth or expansion. This insight formed the basis of the campaign structure. As for the founding team, further details about the B2C team will be made available in the Investor IM. In summary, Fulton Phillips is a private consulting firm with a passion for creating the future in key sectors and industries. This Fulton Phillips project aims to develop an innovative fintech platform to exploit gaps in the asset lending industry. Our consumer-centric solution will empower consumers to efficiently and discreetly obtain funds to satisfy their financial obligations and unlock financial opportunities. If you are interested in participating and want to learn more, please click on the link below to register. And thank you for your time.
Thank you, Fred. For our next business talk session, CEO Jason Atkins of Cake will be speaking to us about the importance of employee shares and how it contributes to building a better team.
Hi everyone, I'm Jason from Cake. If you don't know me yet, I'm the CEO of a company that streamlines and simplifies early stage investor and employee equity management. And a big part of our mission is to help the entrepreneurs and innovators to grow their companies and build the businesses of tomorrow. And we think that ESOPs are a critical part of that. Today we're going to go through the key benefits, a bit about how they work, and also talk about how to simplify and streamline it. So, according to FinTech Australia's report last year, in conjunction with EY, attracting and retaining talent is one of the absolute top problems for innovative companies. This was done for FinTechs, but I think it sort of works across the board. And ESOPs can really help. But even when you do acquire these great people, how do you get them fully committed, like an owner would be, to achieving the company's goals? Culture is hard to maintain at the best of times. And right now, we have some of the hardest conditions financially, and the medical crisis, and lots of people working remotely. So we need all the tools we can to get through this. So most early stage ventures are somewhere on this sort of flow here, and What I was trying to highlight is the huge number of challenges that a business has to overcome during this period. So it's probably, it's really important that you have a great team and that they're connected, motivated, challenged to achieve the goals of your company, to find that product market fit, be pivoting constantly and get you through to the other side. So it's probably no surprise that employee share schemes and ESOPs are on the rise. This is from the UK, so they've had really strong double-digit growth in recent years. And in the US, similarly, 8% of corporate equity has been found to be owned by employees now, totaling around 32 million people, which is really awesome to see. Because it brings not only a more equitable share of the ownership of these companies, but also productivity gains. And we all need that in these times, and it gives us the edge over companies that aren't willing to take this step. Unfortunately, it's very complicated. I've tried this a couple of times back in my CFO days, and by the time I had the accountants in and the lawyers in and we talked it through, the managing directors were quite hesitant. And luckily, over the last few years, there's been a lot of simplification and streamlining in this area, and specialist providers coming out that combine everything together into the one place, which I think helps a lot. And the startup concession scheme is a big plus. Significantly simplified reporting, much improved tax environment for the employees particularly, and they're just much easier to implement and run. So we're going to go through that in detail now. So firstly, eligibility. A lot of people are probably aware of this. So it's for private companies only, up to 10 years and up to 50 million in turnover. If the company qualifies, there's a few rules about who can participate. So employees can, advisors can, and each employee can't own more than 10% of the company. Those people can still participate in the ESOP, but they don't get the great tax breaks. The general flow, once you set up your ESOP, would be to grant options to your team members. The next step is called vesting. Vesting would normally be either time-based or milestone-based, and that is set by the company, but agreed with the employees at the beginning. And you can be constantly granting new options from your pool. And then once an option has been granted to your team and vested, so a year has passed or a milestone has been achieved, then the employee has the ability to exercise, and there's normally a payment associated with that. And then the option will then convert into shares. It has to be ordinary shares with the ESOP plan. The ESOP rules also give a simple framework. So it's really important for the employee and the company to know that they're protected. So what happens if the employee leaves? What happens if the business is sold? Good leavers and bad leavers, and what price is paid and how is it calculated? All those things are set out in the rules, and that's very important for these things to be effective. All right, so what are the benefits? Why would we go through all this? I think most of us would agree that our companies are built by our team, and retention is critical. Innovative companies cannot afford to have high turnover when building IP at such a rapid rate. I know I'd be pretty devoted if any of my key people left. Most ESOPs are subject to vesting rules that encourage employees to stay with the company. So, you can have 2, 3, 4 year vesting periods, and then, exercise periods happen after that. Another great attribute of an ESOP is salary substitution. So in good times, startups can use equity as an attractive balancing item against, say, high corporate salaries. And many innovative and successful employees are very happy to have a part cash, part option remuneration package. And in tough times like now, employees' options can be used as a balancing item, against a full salary or a full-time salary. And we've seen companies using that effectively to keep their company well remunerated and engaged and motivated towards achieving what we're all here to achieve. So, look, we use our ESOP as a big part of our culture. We talk a lot about sharing in the success of Cake, and I think great businesses and great leaders think like that. We also talk a lot about the value of the company with our team and the fact that we're growing this corporate venture together. And I think, the ESOP is a great mechanism for aligning everybody towards increasing the value of your company. So this is one of my favorites, employees sharing in the financial success of the company. Look, as a business leader, I think it's a wonderful achievement to assist your team in the development of their own financial success and freedom. And success also breeds success for your community and our society as a whole. So it's a wonderful benefit of the scheme. Perhaps a little bit more now for the leaders of these companies. The employee share schemes, ESOPs, are a great mechanism for exiting and succession planning. Best to start as early as possible, with a 7 to 10 year time horizon, and start transferring across the capital in a really balanced way, so that when your exit event comes, or the exit timing comes, it makes it a lot easier to take that transition. So it's really hard for me to think why you wouldn't run with an ESOP these days. If you have a look at how an employee views them, so 68% see a positive impact in the financial payment, and 67% appreciate the fair treatment, and so on and so forth. So there's a very strong psychological benefit for your team, which will flow right throughout your company. Each company will make their own decision, of course. For founders and leaders that want engagement, motivation and retention benefits, and to see equitable returns for their team, it really does make sense. For me, it's a no-brainer. And I'll be around for any questions. So just hit me up and I'll be happy to answer. Thanks for having me.
Thank you, Jason. Our next presenter today is CarbonScape. CarbonScape has developed technology to produce graphite battery anode material for the rapidly growing global lithium-ion battery market. They have managed to achieve specific differences to other producers, making them extremely competitive. Here to talk further about this today is Business Development Director Nick Cousins.
Good day to you all. My name is Nick Cousins. I'm the Business Development Director here at CarbonScape. We're based in wine country, Marlborough, New Zealand. Our mission is quite clear. We wish to commercialise the world's most sustainable battery material. In this instance, we're talking about graphite. Now, the dirty battery paradox is something you may have come to terms with, or you may have heard a little more of, as our dependence on fossil fuel begins to drop and renewable technology offerings begin to increase their presence in the market. Now, the lithium-ion battery is one of those examples. Now, interestingly, every lithium-ion battery comprises of about 25% weight graphite. Graphite is mined from parts of East Africa, parts of Northern India, parts of Canada, typically long ways from demand centres. Graphite's also made, or synthetic graphite is also made through the synthesis of petroleum products. Both techniques, both offerings, therefore, are currently at odds with sustainability goals set out around the world right now. They are linear in nature, and they will not allow countries to meet their Paris Agreement expectations, for example. The other thing that's come to light, particularly during this year, is the disruption to supply chains. Supply chains in this nature are globally pervasive, and they are subject to severe disruption. As such, we come up with a series of success cases to underwrite a solution here. We simply take sawdust and we convert this through to battery-grade graphite. We do so at a highly cost-competitive margin when, in respect to the natural or the synthetic offerings on the market, we will produce our graphite for a lower cost. Because it's engineered in nature, we will sell it for a higher price. The engineered nature of our material represents a world first, in so much that this is a new product offering. We will now allow OEMs and cell manufacturers to design a cell to specifications that we can match. This is something that the natural and the synthetic guys can't really do. We're carbon negative. Upon full-scale production, 1 tonne of graphite will attract a -3 tonne CO2 footprint. This speaks to the nature of the feedstock in the first place. So we're net negative. And the last point is we're modular in technology. It is our desire to have our modular technology effectively bolted on to every single demand centre in Europe, or indeed next door to every single state forest in the United States. We're completely agnostic as to where this technology can go. We intend to service the growth for graphite demand. Graphite demand is really underwritten at this point in time by electric vehicles. This is the megatrend of change as the internal combustion engine and the reliance on fossil fuel continues to decline. Take Europe, for example. EV really picks up a lot of the slack here for demand-driven growth for graphite. Portable devices, cell phones, laptops, etc., and indeed the advent of the so-called gigafactory, stationary storage, is really starting to add to the expected annual requirements for graphite. At CarbonScape, we're interested in the serviceable addressable market. At this point, a number in excess of 14 billion tonnes per annum. When one stops to consider the nature of the value chain, they will conclude it is global in nature, it is incredibly complicated, and as mentioned, it is vulnerable to supply disruptions. Taking the example of the lithium-ion battery, you have the elements required to produce a battery entering the chain on the left-hand side of the screen. They go into the chemical supplier bucket. These, for all intents and purposes, are companies that are our competitors. CarbonScape will enter the supply chain just on the cusp of the right-hand side of the chemical supplier bracket there. We have already produced a product that is capable of anode or cathode requirements in the cell. Effectively, we have cut out several steps that the other mining entities would have to undergo in the first place. What that means, therefore, is those household names from the cell supplier down to the battery supplier and onto the OEMs at the right-hand side of the screen are potential customers, of which we are now under a series of NDAs with at least half of them. And the company now is expediting collaborative research arrangements with a handful of cell suppliers and indeed OEMs here. The value creation we anticipate at CarbonScape is our product, being a net negative CO2 emitter, will attract a green premium. Talking to OEMs, they will be paying up to 10% green premium alone. There is a terrific supply chain multiplier effect to be gained here. Take, for instance, Volkswagen, for instance, are now consolidating upstream here. They've gone and bought themselves a lithium mine. We intend to have a 10,000 tonne plant operational, which is capable of $90 million of revenue, for instance. We intend to do this through joint venture arrangements. We intend to do this through licensing, geographical ring fencing arrangements. The commercial traction has been incredible. At this point, we have entered into a series of NDA-bound conversations with a handful of manufacturers in that supply chain. As mentioned, we start to work our way towards collaborative relationships, be it in the technical or commercial space. The reason industry is picking up an awful lot of interest right now is the fact this is simply a world-first product that has exceptional engineering properties when put into the cell testing. As we entered into 2020, we sought third-party validation, be that in the product offering itself with partners in the United States who have subsequently taken this through initial cell testing. We've employed the world's largest engineering firm to validate the process, so to de-risk the notion of scale-up. And indeed, we've entertained now discussions working in a collaborative fashion with partners in the UK and the EU to underwrite the sustainability criteria. We are now drafting a new PCR that is going to the EU for submission at the end of this month. The team are in the midst right now of a Series A capital raise. This capital is required to effectively de-risk as we work our way through with our engineering partners to the construction, the initial construction of at least a 100-tonne demonstration plant. Vendor qualification process would follow. This is a necessary step taken by anyone in the cell or OEM space. That might take up to 8 months of cell testing alone with our product in it. As we work towards 2024, we realise there are a number of options that will need to be considered. This might be IPO, trade sale, partial trade sale, joint venture, licensing. Nothing's off the table right now. As we continue on, the ultimate goal is to start producing multiple 10,000 tonne per annum plants. The Series A capital raise at the moment is for $4.5 million, and we are driven by a very experienced management team here. We've come from a number of walks of life in engineering, commercial, energy backgrounds, and we're at the vanguard of leading this revolution of change. The $4.5 million raise will most likely be met with a Series B round, give or take half to 2021, depending on how discussions are currently going. That is the capital required to build the demonstration plant and take us all the way through to that 48-month milestone, the IPO, trade sale options, etc. That brings me to the end of today's presentation. I would certainly encourage all of you to take a look at our website, find us on LinkedIn, or indeed contact Ivan Williams or myself directly. We'll be more than happy to entertain more mature conversations. Thank you for your time.
Thank you, Nick. Our next presenter today is GAF Consulting, presenting Organic Plus Katoomba, a highly profitable and proven technology, providing high-yielding crops that are sustainable, drought-proof, free of herbicides and pesticides. Here to talk further about this is Managing Director Glenn Freeman.
Thank you for joining. My name's Glenn Freeman. I'm the Managing Director of Organics Plus Katoomba. This is a unique opportunity for a startup where we've actually spent the last 2 years finding our client before we began to manufacture. And what I'm about to show you is the actual technology we will be using to produce fruit and vegetables for Woolworths, who will take all of what we have on offer and have grown inside our agro tunnels here at Katoomba. The Agrotunnel is a proven technology, but it's the first time it's been used in Australia. It's environmentally friendly and has very high yield crops and that are drought proof, and we never use herbicides or pesticides, hence the name Organics Plus. And it's what Woolworths are really excited about. When we start to install the agro tunnel at 16 Cooper Street, Katoomba, that site has been chosen specifically so that we can distribute both sides of the mountain range for Woolworths and also be able to sell to specialty retailers who require antioxidant food plants and microgreens. They're highly sought after, but they are out of season most of the time. With an agro tunnel, the seasons are not something that they have to worry about. In an agro tunnel, our agro tunnel at Katoomba is on 160 square metre site. That is for the agro tunnel. The agro tunnel has the equivalent production of 20 acres of food without any concern for season or outside climates. We could actually grow lettuce in the Antarctic all year round if we wanted to. The other thing that's exciting about the agro tunnel is it uses very little water. It only uses 20 litres per day. And because of that, it can be positioned anywhere. Its electrical system that the technology runs from is 24 volt, so it uses very little electricity. When it comes to food security, and food security means the ability to get fresh food when you want it, which, as we know with COVID-19, has severely impacted that, retailers are looking for ways that they can get fresh fruit and vegetables without having to worry about border crossings or delivery, or in our case here, we've seen retail suppliers have been closed because of the infection of the virus, and retail distribution centres have been closed down because of the virus. So that has made it difficult for the consumer to get fresh product all the time. The agro tunnel runs its lighting and all of its systems using technology that uses both CO2, and also it is not required to have any air conditioning or any special heating or cooling systems inside, because the agro tunnel is actually built earth covered. The agro tunnel can run 24 hours a day. There is no stress on the plants, and the agro tunnel costs about 5% of what a normal growing environment would cost, but produces 10 times what a hydroponic space would produce. Throughout Australia, the market for demand of fresh food is enormous. We have been successful in getting Woolworths to be our purchaser of all the product that we can produce out of the agro tunnel. Our team is myself, Glenn Freeman. I've had 40 years experience in development in the construction industry, but we are supported by the Green Magic Agriculture Group. They provide us with all the technology and the structures, and they build the tunnel to the point of commissioning the tunnel to grow the food. Green Magic Agriculture also provides all the food scientists team to ensure the growing methodologies and growing protocols are developed for the food being grown. And each of the staff who will work in the tunnel at Katoomba are fully trained in every aspect of the operation. That is ongoing. Organics Plus Katoomba will only have one full-time senior person running the tunnel, and they are being assisted by several part-time workers who will be brought in at harvest time. In our slides, you will notice the site at Katoomba and the plans and perspective of the actual agro tunnel that is to be ordered and fitted on this site. It gives us the ability to have office space and also a warehouse to take the fresh produce out of the airlocked agro tunnel and take that directly into the warehouse and package it according to Woolworths requirements. What we're looking for is an investor in a startup for 30% equity in the business. Those funds are going to be used to purchase the property for $750,000 and construct and commission the agro tunnel for $1.45 million. The plant and equipment needed for the packaging and delivery is $260,000. The balance of funds will be used for the establishment and operational expenditures. What we are looking at doing for our investor is to repay that capital in full, commencing on year 2 of the operation. This repayment will come from 50% of the net profits per annum. The agro tunnel is considered a farm building as it has no bathrooms or kitchens in it, and it's solely to produce food, and as such doesn't require extensive approvals. The agro tunnel will take about 4.5 months to be constructed and commissioned on site, and the first harvest is 4 weeks later. The plants grown will depend on the demand of the customer, and initially Woolworths have asked us to produce strawberries, kale and bok choy. In the first year, net profit would be $474,000, and in the second year and subsequent years, $634,000 from that agro tunnel. In summary, the agro tunnel can grow a variety of out-of-seas popular fruit and vegetables, herbs, and in any seasonal climate. Agro tunnels are most effective. They use 90% less water, environmentally friendly, and can be cropped 10 to 12 times per annum, as opposed to the conventional 2 to 4. So thank you for taking the time to listen, and I hope to hear from you. Thanks very much.
Thank you, Glenn. Our next business talk session today will be presented by Mitch Eady, Director at PwC. The topic of discussion being R&D and government incentives. Enjoy.
Thanks, Marta, and thanks again for the opportunity to speak today. I'd just like to speak to all of you about 2 potential sources of innovation funding, both government funding sources and both non-diluted sources, more importantly. And they are the R&D tax incentive and the export market development grant, 2 of the main areas where I assist businesses in obtaining this non-diluted government funding. First of all, the R&D tax incentive. What is it? It's a broad-based tax offset that most people would be aware of, but it's a potentially cash refundable amount for expenditure on activities that can be evidenced as core or supporting R&D activities. And we'll discuss those in a little more detail later on. The relevant 2 rates of R&D offset for businesses, and you can only obtain one of these rates, and they're dependent on your turnover. 38.5% non-refundable for businesses that have greater than $20 million worth of turnover in a financial year, or 43.5% refundable for the more startup and growth businesses that are turning over less than $20 million at present. Either of these relevant rates are obtained in place of a tax deduction for any dollar of R&D spent. So basically, a business will replace the 27.5% corporate tax rate usually with either 38.5% non-refundable or 43.5% refundable. Potentially very, very useful amount, a reasonable size amount, and a very useful amount to continue funding the innovation journey, as I mentioned, non-diluted. The most important point with this program is that it requires strong evidence to substantiate the performance of both R&D activities, so the technical merit of how activities are core or supporting R&D activities, and that evidence needs to be kept and produced to AusIndustry, the technical regulator, if required. You also need to evidence the connection of your expenditure and probably most importantly, the delineation of this from ordinary business activity to the Australian Taxation Office if they ask for it, and the ATO are, of course, the body who regulate the numbers side of the claim. What is an R&D activity? And this is where R&D claims either stand up or fall down. You need to satisfy all parts of this definition, not one or two or four. First of all, you need to aim to test a hypothesis. So new or improved product, service, platform, and typically using different materials, techniques, or technology, or a significant advancement on what's being used at present. R&D activities involve experimentation to test your hypothesis, and you need to document that performance of that testing. They need to aim to resolve unknown technical outcomes, which basically means there's not a solution out there that you can obtain on reasonable commercial terms saying, do this way and you'll get to an outcome. And essentially your hypothesis has either been proven or disproved by someone else before you do so. And tying it all together, you're aiming to generate some form of new knowledge that advances the state of the art. Once you have an R&D activity that you feel confident in being able to register, the expenditure side of the claim is fairly easy from a logic perspective. It very much depends on the evidence and delineating between, as I mentioned, ordinary business activity and R&D activity. Types of R&D expenditure that can be included within a R&D tax schedule are predominantly staff time, so the cost of that, recording time as it's spent, and obviously the amount paid for the spending of that time to those employees. The cost of experimental materials, depending obviously what you're producing subject matter wise, and that's subject to feedstock rules. Contract expenditure, subject to the for and not at risk test. So a little bit of work needs to go into assessing the terms in which you contract with who you're contracting with, and determining essentially whose R&D that is. Also, limited amount of decline in value of assets and business overhead can be included to add a bit of cream on top to the eligible expenditure amount. Ultimately, the sum of all of those comes together, and what is obtained on that tax relief wise is either your 38.5% or 43.5% on the first slide. The process of registration. You need to register your R&D activities year on year. It's a self-assessment regime primarily, and you need to register from a deadline standpoint within 10 months of the end of your financial year. So if you've got a June year end, like most Australian businesses, you need to register by the end of the April after. So the businesses that 30 June 2020, which is just finished 5 weeks or so ago, that R&D claim can be lodged all the way up until 30 April 2021. You can, of course, have registered it at any point from the day after the financial year ending. That's the first day you can register. To include your R&D costs in your tax return, though, you must register the activities before you lodge your tax return. So most tax returns are due 6.5 months after the end of the year, so typically in mid-January for a June year end. You typically need to lodge your R&D activity application form to register those activities that the costs relate to that you're going to put in your tax return before you lodge your tax return. So what you'll find is most businesses lodge their R&D claim within 6 months, not within 10, even though 10 is the deadline. Another part of the R&D program allows businesses to register R&D activities in the advanced finding process. In this case, you need to register your activities before the end of the first year that you're aiming to claim them, though. So if you were aiming to claim activities for 30 June 2020, you would have need to have done that by 30 June 2020. The other part of the finding process, and probably the more regularly used part of it, involves an overseas finding, where, again, you need to register before the end of the year, the first year that you're aiming to claim the activities in. But the big reason for businesses trying to obtain overseas findings is these are the only way that overseas R&D costs can be claimed within the R&D tax incentive as a whole. You need to have an overseas finding signed off by Oz Industry that then allows you to claim the overseas expenditure items, some of the items at the top of the slide that are incurred not in Australia. And without that finding, you won't be able to claim those. You'll be limited to only your Australian incurred expenditure from a location standpoint. The difference between the advance and overseas finding process and the regular year-on-year assessment, self-assessment, is that one self-assessment that you need to have evidence to back up, and you only need to show that evidence if you get asked to show it. But what the finding process involves is you basically invite Oz Industry to assess the technical eligibility of your activities at first instant, as opposed to doing that self-assessment and keeping the records. Obviously, you still need to keep the records, but you'll be less likely to be asked for them after you get a finding, if you get one, because Oz Industry will bind themselves and the ATO to that finding. Other R&D points. So one thing, ATO currently fairly active in auditing R&D claims. We've all seen a lot of press around that in the past probably 2 years or so. Specific interest points at the moment are the refundable space. Claiming ordinary business activities as R&D is a big catch-all kind of concern. So really key to evidence the delineation of both your activity from your regular business, your R&D activity from your regular business activity, and also the expenditure associated with both of those. And real focus at the moment on international inbound arrangements, not relevant for everyone obviously, but how R&D interacts with IP ownership, transfer pricing rules, cost pluses, things like that. So that's an area of focus at present. Some financiers exist in the market that will forward fund cash refundable R&D offsets, which is an interesting opportunity for some businesses that where they can allow, or the financiers will provide funding within the year. So you can only claim once per year at the end of the year, but they can potentially forward fund that at different periods within the year, regardless of whether you finance or not, or you just claim once and wait for your refund or your tax reduction at that time. Evidence, claim governance, the key to protect your refund. No more auditing going on in the R&D space, probably as a quantity than normal, but fights that at the moment that are very much evidence based and hard to win unless you have that. Once you, from a time continuum of product development, I suppose R&D is supposed to reward businesses for research development up to a given point of time, and then typically that's where other government funding programs will then pop in and become more relevant to businesses. Some including commercialization grants, and ultimately when you're commercializing overseas, the export market development grant, or at least aiming to do that. Often you'll find that the R&D and the EMDG for businesses kind of occur at the same time toward the back end of product development, or as businesses are developing new things, you can still obtain R&D while you're commercializing things you've already developed overseas on an EMDG front. What is EMDG? It's a smaller program than the R&D tax incentive, but it's not part of the tax system. It's administered by Austrade. Again, most importantly, it's non-diluted funding, and it's a grant program for aspiring and current exporters that are registered Australian businesses, typically small and medium size, that aims to encourage them to develop export markets by reimbursing them half of their eligible export promotion expenses, up to a total grant of $150,000 per year. So not a huge program, but a program that is of great use again. You can claim for up to 8 years for each eligible applicant. Most importantly, as I mentioned, small and medium businesses. So any applicant for the EMDG needs to have less than $50 million of turnover. Other notes as to important things within the EMDG program, you can claim expenses for exporting to all markets other than New Zealand, strangely, and North Korea, probably not so strangely. Cannot claim capital expenditure, so must be expensed in your accounts. can't be for R&D, product development or sales. There's other programs, as I mentioned, that aim to reward that kind of activity. This is merely for exporting and marketing, and obviously aiming to do that to overseas markets. The grants claimed yearly, with the grant year being the financial year. So no matter what financial year you have, the EMDG year is always July to June, which is, most Australian businesses have that financial year anyway. Expenses incurred in a grant year must be claimed as part of the EMDG application submitted in the financial year immediately following. The one interesting and advantageous rule is, for a first application, you can actually include expenses from the 2 financial years immediately before the application. So you can claim 2 years within one in the first year. The reason that might be relevant is you might dip your toe in the water spend-wise at the end of a financial year and lose the ability to claim that if you don't, because you'll be under the limit. You do need to incur $15,000 of expenditure, eligible export promotion expenditure in a year, and you can incur up to as much as you like, but the kind of magic number is you don't get anything on the first 5,000, and you get half up to a total of 150. So anything above 305 that's eligible, you'll probably get close to the 150,000. Interestingly, grant money received is assessable income in the year received in your tax return. You'll typically receive the income in the next year after you incur the expenditure, because that's when you claim it, or when you put the claim in, and you'll have to pay income tax on that in the following year's tax return at your relevant rate. There's 8 main EMDG expense categories, and some of them have limits as to what makes up the a maximum within that area of expenditure where you can claim up to. Overseas reps, so employees or contractors whose job it is to basically sell and or solicit customers or clients, or sell products in those overseas markets. Up to 200,000 is the maximum you can claim there, and if you claim the 200, 100 will be the potential grant received. With all of these, very, very key evidence of payments are required, and description or role of the type of expense and how it relates to EMDG activity, very, very key. Now, on the overseas rep side, that's probably a contract with a role description within it. Marketing consultants, typically an external consultant, up to $50,000 per claim. Marketing visits, so basically traveling from Australia to other destinations internationally to sell and or promote. Air travel costs can be claimed. There's a cap on first class if people are fortunate to travel like that. Never gone first class myself. $350 per day is kind of a per diem rate for accommodation, food, things like that. You can only claim that for up to 21 days. Not sure why the 21-day cap exists, but it does there. Free samples, so obviously self-explanatory, usually a giving away of product via some kind of free launch, up to $15,000 per claim. Trade fairs, so traveling overseas to participate in a trade fair, exhibition, again, evidence of payment and reason for attendance required, no cap on that amount. Promotional literature, brochures, videos, advertising, website development, evidence of payments required. So I've had businesses claim, Facebook, Google, Pinterest, those types of things, pending what they're using them for. Again, evidence of what's been done and the payments being made are required. Cost of bringing buyers to Australia who aren't Australian, up to $45,000 there. Again, purpose and evidence paramount. And where some businesses can add significant cost to their claim, essentially granting, registering or extending rights under foreign laws to eligible intellectual property rights. So basically patent type stuff internationally, up to $50,000. So as everyone knows, patents and patent lawyers aren't cheap. So that's something where there's often a significant expense there that half of that can be obtained back through this program. Process of application, a little earlier deadline year on year than R&D. So need to lodge your R&D application with Austrade by November 30. Both the R&D and the EMDG are electronic forms, and they're all lodged online these days, as everything else is. Austrade, after you lodge, will then potentially conduct a visit, or in the non-COVID-19 times they do. I'm not sure how that'll be done this year, but that they typically use that visit to audit a sample of your expense eligibility, and then use that sampling to extend the logic to how much they believe of what you've claimed is actually eligible for the EMDG. The grant will then be paid, sometimes in 2 to 3 tranches, more often one. There's a bucket per year that changes slightly pending government funding as to how much this grant is actually worth in total or is paid out by it. If you're claiming up toward that 150, you're more likely to get more than one tranche. So you'll get some of your money initially and then another tranche, whereas, the smaller the claim, the more likely you are to get it in one go. And again, evidence of purpose and incurrence of expense, again, paramount. So very, very key in all grant and tax matters at the moment. A big focus from Treasury around essentially a limited amount of funding to go around at the moment, but a desire by government to get the economy back going after the COVID-19 pandemic. We've hopefully seen the worst of it, although I'm no health expert. From a EMDG and R&D lens, a good appetite for businesses to obtain funding as quickly as the programs allow them to at the moment. So if you have an interest in either of these, or you know a business that has an interest in obtaining and may be eligible for either of these programs, please let me know, and I'd love to assist and help that business and the economy as a whole recover fast. Thank you very much, and hopefully I'll speak to any of you soon.
Thank you, Mitch. Our next presenter today is MedicInvest. They hold equity in the fastest growing telehealth company on Dock. They have shattered their 12-month target in a few months and continue to grow exponentially. Here to talk further about this unique opportunity is Director David Fitzsimmons.
Hello investors, it's lovely to meet you, and I'd like to talk to you about MedicInvest, an amazing opportunity given the current circumstances that we find ourselves in. So MedicInvest is raising capital for 2 reasons. The first is to purchase equity in the fastest growing telehealth company in the United States, a company called OnDoc. And in fact, because we're over halfway through this capital raise, that's already been achieved. And I'll talk a little bit more about that later in the presentation. The second part of the capital raise is to raise money for marketing efforts so that we can expose OnDoc services to a wider audience. And we're doing that so that we can get a recurring commission from OnDoc as a result of an exclusive marketing arrangement that we have with them, which is super exciting because effectively what investors are getting is the traditional capital increase as well as the dividend. And then on the other side, the passive income stream as a result of the commissions. So it is a fantastic opportunity to make the very most out of a difficult circumstance that we find ourselves in globally at the moment. Now, OnDoc has actually come into an industry that it was ripe for disruption. And the reason for that is, I'm not sure if you know anyone in the United States, but they will tell you the healthcare industry has failed them for quite some time. And there's a whole raft of reasons. I'm whipping through these slides, by the way, to stay to the time limit. But if you'd like to ask me some questions, I'm very happy to do that afterward in the deal room. So OnDoc offers a bundle of services, including telehealth, which means you can use a mobile phone or smart device to connect with a doctor. So you don't have to wait till the following day and make an appointment, which is probably in the next few days, and then drive to the doctor, sit in the waiting room and expose yourself to virus. Instead, you press a button and 10 minutes later, you're speaking to a doctor. Now, if you need a prescribed medication, then they can actually issue that and send it to a local pharmacy. So you can see that we've completely short-circuited that process. And it is a very quick and efficient way of doing it. It comes with two other services, which unfortunately I don't have time to talk about, but pause the slide and make sure you have a look at it because they're amazing services as well. But you can see just from the first two I spoke about how it's going to revolutionize the way people engage with their health practitioners. So how does OnDoc do it? Well, it doesn't have the doctors. It doesn't have that infrastructural headache. In fact, what it does is it's an aggregator of leading healthcare services. And one of them is Teladoc, for example. And Teladoc is the largest telehealth company in the United States. And it has a satisfaction rating of 95%. So OnDoc owns the customers, but it can actually select and choose the very best health services for those customers. So that way, if a service provider fails to deliver, they can turn them off and turn on a different service provider. So it owns the most important asset in this business, the customer itself. Now, this talks about the cost of pharmaceuticals. Because OnDoc offers a cheaper way of doing it, it completely disrupts that service as well. So have a look at those numbers. And if you think about an exemplar, if you have a nucleus family of one adult or two adults and children as well, you can see that there is some very significant cost savings. And in fact, a member could actually join and have a cost positive experience. In other words, the savings that they get from the pharmaceuticals could exceed the cost of the membership. Now, the market is enormous in the United States, as you'd probably be aware. There's 44 million people have no health insurance, and in fact, another 38 million people have limited health insurance. So they're obvious target markets, but OnDoc service has actually really connected very strongly with other segments that I'm going to talk about in a second. Now, this figure was actually done prior to the pandemic, so the numbers have probably increased very dramatically since then. Now, the target audiences that I mentioned just a moment ago that are resonating very strongly with the OnDoc offerings are all of these people. Now, you can imagine that, for example, a soccer mum, instead of having to wait for the following day to get treatment for their child, they can get treatment immediately. There's an obvious reason for that. Retirees don't have to battle the traffic, nor do they have to try and make regular appointments or sit in waiting rooms and exposing themselves to virus. So this service has actually changed dramatically the way people interact with their primary care physicians. OnDoc uses a really distinct marketing approach, and that is they use a direct sales approach. So think Tupperware parties. So by engaging people in that very personal way, it's getting extremely good engagement as well as reduction in churn rate because people have a personal connection with their service provider. They also use indirect methodologies that we don't have time to touch on at the moment. But like I said, if you've got any questions, please make sure you ask them in the deal room. Now, this is one of the really exciting parts. I'm going to spend a couple of minutes on this. Churches and community groups are enormous in the United States, like the country itself. So they have audience sizes of, for example, over 10,000. So churches are already contacting OnDoc and saying, listen, is there any chance we could expose these services to our members? And why would they want to do that? Well, instead of doing the cake stall, they introduce OnDoc to their congregation, which is a fantastic service, which everybody probably needs. And at the same time, they get a recurring income from that as well. So a one-off effort could mean that they create persistent, reliable income. So they're super excited about it. So competitive analysis. Now this landscape has changed a little bit more since this slide was completed as a result of the pandemic. Because it's a moving feast, it's a little bit hard to quantify, but there are more competitors in the marketplace. But there is no one that does anything like OnDoc for the reason of the marketing methodology and for the bundling approach that they've got. That really low cost, all-inclusive Netflix style costing model has not been replicated anywhere. So it's very, very unique. And because it's using the most trusted and most reputable platform, customers are getting a great result. Now, OnDoc's hit some important milestones, which is fantastic. And I guess the key there is that OnDoc is not a startup. So you're not investing in a startup, you're investing in an organization that's been around and enjoyed their first year anniversary already. So who is WebMate? So WebMate is my company. And why am I mentioning it? Because MedicInvest, as I said to you at the start, is using the money for two purposes. One, to purchase equity, which has already been done. As I said, we're already over halfway through the cap raise. The second half is for marketing. So this is just to highlight the fact that we have extremely good credential in the development of that process. And how are we going to do it? Well, we're going to do some online approaches. So micro influencers, not macro influencers, no, not the Kim Kardashians of the world, but micro influencers that get great responses from their audiences, as well as Facebook, Instagram, Google AdWords, and then offline, not so much on ground teams because of the pandemic, unfortunately, but certainly, excuse me, we'll be working with those large community groups because we have an exclusive arrangement with OnDoc that we get first opportunity at those. So intended outcomes for those people who are investing in it, you can see the details here. Unfortunately, I don't have time to go through it blow by blow, but please pause the slide and make sure you consume all of that information. Finally, the marketing approach, we're going to start at around $60 per user. And you can see that I've got it down there at May 19. And the reason for that is I grossly underestimated the amount of time that it required for US solicitors and Australian solicitors to work out the contracts, and then the Australian solicitors to establish the corporate structures to make sure that all our investors are protected. By the way, this is an ASIC registered entity. So our target values are 80,000. And as I said to you before, given the fact that churches are already approaching the organization, we probably don't need too many churches alone, just in that one methodology, but we're going to be using, as I said, a whole raft of different approaches to try and make sure we hit these targets. So this is the offer value. And you can see the return rate is extremely good. We've used very conservative numbers. And I want you to keep in mind something, and that is that this was done prior to the pandemic. So you can imagine that there's been a paradigm shift, and people, instead of thinking, what's a telehealth? When you've got people like the President of the United States, regardless of your political affiliations, saying use telehealth, it removes the question of what is and should I to which one should I use? So our marketing approach is going to change very much as a result of that. Now, the key takeaways that I want you guys to remember are the healthcare industry has been failing the American people for a really long time. And you're investing in a company that has been around for 12 months already and has already seen massive capital growth. As I said, almost doubled in size. We've already seen some amazing changes that have occurred as a result of this company. And in the grim times, many companies are contracting. This one is expanding, which is fantastic, and will deliver some really significant returns. And whilst I would never want anyone to think that we're profiteering from other people's losses, the pandemic has created the perfect opportunity for an organization such as this. And finally, in the future, when you're enjoying the great returns as a result of this investment, you can know that from a social aspect, it's been you've been doing a wonderful thing to allow Americans to get access to a high quality, low cost service at a time they need it most. I want to thank you very much for your time. And as I said, any questions that you've got, happy to answer them in the deal room.
Thank you, David. Up next to present is Cosmo Aesthetics. Established in 2015, Cosmo Aesthetics is focused on the development and commercialization of a range of devices utilizing low-level light technology, a form of light demonstrated to be safe that at specific doses can offer therapeutic and aesthetic benefits. Here to talk further about this is co-founder Matthew Jaffazadeh.
Hello and welcome to my presentation. My name is Dr. Matthew Jaffazadeh, and I'm the director and founder of Cosmo Aesthetics. I'm here to present you our company. Cosmo Aesthetics is a strong research and development company based in Melbourne, Australia. We've got a very large portfolio of disruptive consumer health for well-being, oral health, beauty, and pain management technologies. We would like to be the global leader in consumer devices, self-home therapy, as well as non-invasive technologies for doctors and health professionals to use those technologies for the patients around the world. We're here to seek for a strong commercial alliance that could help us with commercialization of our technologies and market distribution. Our company was developed in 2015. We've got a very strong team of doctors and scientists and a senior management team that are helping with our company. Our range of devices are covering anywhere around $3 trillion because of their wide coverage. And we would like to be the global leader in this, obviously, market. I'm here to present you with our two technologies today, which is Orolase series, which is our low-level laser technology, as well as AirShore personal air purification. So the problem is that people are fearful of attending doctors and clinics because of the multiple visits, the cost, they're fearful of side effects, and the risk of having some issues that they can't really predict. So we are trying to bring them some solutions that they could definitely rely on those devices and be able to treat those symptoms comfortably at home. The core technology that we're using is a low-level light technology, which is a proven, scientific proven science technology that has been used for many, many decades around the world. Hospitals, institutes, universities, and clinics are using those technologies widely. And now the actual usage is getting more and more, obviously, reliable technology for consumers to use at home. The technology is safe, non-invasive, very affordable, and is natural. It's proven for reduction of the pain, inflammation, swelling, reduction of the infection, as well as increasing in amount of collagen. So it's a great tool for anti-aging as well. The market size is 16.7 billion, which we're looking at 8.6 billion for oral care and 5.9 sleep apnea and snoring, as well as 2.2 billion for aesthetic purposes, as well as lip volumization. So Orolase series consists of three different products. One is the Orolase Total Care, which is the one on the left, the one in the middle called Orolase Pain Ease, and the one on the right called Orolase Aesthetic. Orolase Total Care is an intraoral light therapy designed for reduction of sore throat, gum disease, gum pain, post-surgical pain, and as well as improving the symptoms of sleep apnea and snoring by increasing the collagen within the soft palate and the uvula and the back of the mouth. So by increasing the collagen, the actual skin can slowly alleviate and allow more air to travel, so helping with the symptoms of snoring and sleep apnea. At the same time, it's got some healing LED capability that can reduce the sore throat and tonsillitis, which is the major symptom that people suffering from COVID-19 at hospitals. So this could be a great tool that could be used as a PPE or a tool that could be used at hospitals or clinics by doctors or people self-therapy at home. We're using this modality for designing a new device for kids to be able to entice to use it for their tonsillitis and teething issues called Orolase Loli. There is no competitor in this market. We have a very solid patent and IP in place for 300 to 1000 nanometer wavelength in intraoral therapy. The second device is called Orolase Pain Ease, which is designed for reduction of the oral ulcer, which is a painful lesion in the mouth, which could happen time to time, and the actual size is 1.3 billion. So one treatment could reduce the pain by 10% in 5 minutes without being any pain or non-invasive. The third device is Orolase Aesthetic, which is an exciting technology that we have been building. So all these technologies have been built prototypes. So we are finalizing the last version in the next 3 months. This is Orolase Aesthetic, which is designed for increasing the volume of the lip, as well as improving lines and wrinkles around the mouth and tightening of the skin around the neck. Our major partners could be companies such as Philips, Johnson & Johnson, JSK, or 3M, which we have already got some interest from Philips on Innovation Portal. So as you can see, there is no major competitive in this market. We are very sort of advanced in terms of patent and smart design that we have put in place. The second technology is AirSure personal air filtration, which we are very proud of. It's a very strong Australian design device that could eliminate the need of mask. As we know, masks have a lot of disadvantages, and people are very hesitant to wear them because of they're not comfortable. They can create fog. They're very difficult to breathe. They can be expensive. They're non-recyclable, and many other issues. So we have come up with a very strong and smart innovative technology called AirSure Blade, which I'm going to run a quick video for better understanding of how this technology is working.
Wearing a face mask to protect from inhaling harmful microscopic floating air particles can be difficult or challenging to many individuals for being uncomfortable, hard to breathe, unaesthetic, getting foggy, lacking proper sealing around the face, risk of being reused in cross-contamination, non-recyclable, and it can be expensive. Hello to a new revolutionary personal filtered air curtain technology. AirSure Blade is a proudly Australian designed, battery-operated personal air filtration and negative ion generating technology that through its patented Air Blade curtain, multi-layered HEPA filter, activated carbon, and strong negative ion generating technology is able to filter, remove, and reject air pollutions as far as 30 centimeters away from the mouth region, eliminating 99.99% of the harmful airborne diseases and particles, offering you nothing but pure, fresh, and clean air at a running cost of less than 5 cents a day. So long to masks and hello to clean, healthy air by AirSure Blade.
Thank you. And need to mention that this technology is only $159, is battery operated, and obviously can be recharged and used and enjoy the fresh, clean air on a daily basis. A little bit about myself. I'm an oral surgeon and a senior laser practitioner specialized in the laser as well as low-level light therapy. We have a very strong team on our board. We have our CEO is ex-director of Johnson & Johnson, Pfizer, and Hologic, as well as other senior directors that have been working internationally for many years with great expertise and capabilities. We've got a very strong team in the United States, in Canada, as well as China. Our chief scientist, Dr. McMillie, she has over 56 published studies in the field of low-level light therapy, and she manages the team of engineers in Australia, and everything gets built in China. We are about to finish the completion of Orolaze and AirSure within the next 6 to 12 weeks. We are a member of Johnson & Johnson J Labs in Shanghai and the finalist award winner at FTZ Overseas Talent Innovation Company competition, which was held in China, Shanghai in November last year. Thank you for watching, and I would like to hopefully hear back from you. If you have any questions, please feel free to reach out on Chris portal or simply download the QR code. Thanks again for your time, and wish you a great day. Cheers.
Thank you, Matthew. Our next business talk session today will be presented by James Parnwell, Managing Director at The Online Co. The topic of discussion being digital marketing in uncertain times. Enjoy.
Hi there, my name's James Parnwell. I'm the Managing Director of The Online Co. We're a digital marketing agency based here in Sydney. We work with all businesses of all shapes and sizes, helping them grow through long-term strategic partnerships. Now, what I want to do is talk to you about digital marketing in uncertain times. COVID's been a complete game changer, and I think 6 months when it all hit, we all started talking about the new normal, and that once the panic was over, that we'd get into a new normal. And that conversation's changed. We're now talking about the next normal. And I guess what that means is that we're looking at going through a series of normals, and we need to be agile and moving and constantly shifting in order to stay up to date. what I want to do is share with you a framework and view that framework through the lens of uncertain times, so that using your digital marketing, you can be constantly moving and seeing what needs to be adjusted. So let's kick off firstly by discussing this strategic framework. Now there's 3 levels to this, and I guess when I talk about digital marketing, most people will say, hey, what changes do I need to make to my Google Ads campaign? Or how do we need to adjust SEO? Or what Facebook tactics do we need to change? And all of those are valid questions, but I think they're tactical questions. In other words, they're the second question. Really what we need to do is actually revisit our strategy. We possibly need to be revisiting our strategy fairly regularly, given just the rate of change. So in terms of strategy, I've just boiled the strategic question down to one simple sentence. How do we achieve our business goals by communicating to the right people at the right time with the right message? Now this point about business goals, so often I talk to people in marketing who haven't set goals, and they want to do something and want to grow but haven't actually set any goals, and it just means they're not measuring the performance, the return on investment, and the outcomes needed. Given that COVID has required many businesses to pivot, and I mean lots of the clients I work with, we're helping them pivot. My accountant's talking about all of his clients pivoting. My business coach is talking about all of his clients pivoting. Lots of people shifting what it is they're doing. And if we're talking about a series of next normals, that pivot might be a semi-regular new pivot, and the business goals may change. And this is kind of the fundamental structural basis of our business. We may be changing what it is we're looking to achieve. So strategically, we've got to be asking that question very first. The next question is about the right people. And this is an old school marketing question about market segmentation. Now, geographically, you may be targeting a city, a state, a country. You may be targeting the whole world. If you've pivoted to going online, for example, all of a sudden new markets open to you. Now, does that mean you should be pushing into new markets, new geographic areas? Maybe, maybe not. Do you have the capacity, etc.? There's a few questions there, but the market segment geographically may change. Demographically, are we now talking to younger people, older people? Are more people that are perhaps a bit older online more? Does that open opportunities to you? And then psychographically, well, how have people's interests changed? People are not going out to restaurants as often. They're obviously not going and seeing bands or entertainment, or people are spending a lot more time at home. So what interests have evolved? People are obviously spending a lot of time on Netflix and whatnot. It's a good time to think through your market, think through your customer, so you make sure you're talking to the right people. So with this question, how to achieve our business goals by communicating to the right people at the right time with the right message, the next question is the question about the right time. How do we talk to people at the right time? So with the marketing funnel, this idea actually was designed in 1898. It's 122 years old, and it's just a real tribute to the robustness of the marketing theory behind this, that it's survived all of that time, since before cars were invented, or at least in mainstream use. Now, I've broken this quite simply into cold, warm and hot. Now, cold people are people that have never heard of you, and because they've never heard of you, they're not going to do business with you. Warm people are those that know who you are, like you, but are also not ready to do business with you. And then finally, hot people are people that know who you are and they're ready to sign on the dotted line. They're ready to part with their money and do business with you. Now, we've got to talk to people at the right way in the right time. And this can be shifting in a COVID next normal type of world. At the cold level, it's quite important that we engage people at an interest level, not at a buy now level. A lot of marketing that you might see, we would call shouty, pushy, uncomfortable, bit yuck, and a lot of this kind of loud marketing we like to describe as proposing marriage on the first date. It's awkward, we don't like it, and the answer is usually no. So it's generally unsuccessful marketing. The goal of cold marketing is just to gain the interest and get people into warm so they know who you are, they like you. Now, in the warm phase, the goal is around engagement and education. So if you can engage them, teach them what you do, give them content, have a generous mindset, whether that be through workshops, webinars, blog articles, whatever it is that you can give away for free to educate people. And what you're essentially doing is building a relationship, building a real trusting relationship so that they're then ready to go to hot. Now, hot marketing, everybody knows, buy now, call now, register now, all that sort of stuff. We all know that pretty well, so I won't spend a lot of time on that. Now, in a COVID world, this is shifting. It's possible that your cold marketing at the top, just getting interest, it needs to have a new tone to it. Maybe the warm things that you're offering in the middle have changed. Maybe your businesses have pivoted and you're redesigning the whole marketing funnel. Now, let's talk about the tactics and the different things that we can do here. And I've designed this quadrant here to help place yourself on in one of these 4 quadrants. Now, I'll start with the bottom right hand corner. These are high value, low complexity items. So if you're going to buy a new kitchen, you're probably going to have to spend $30,000 or more. It's a high ticket item, but it's not very complex. So you know how kitchens work. You can't build one yourself, but you're quite confident you can go and talk to someone and know that you can give them the right advice about what you need and get the right outcome in the end. So when you're talking in the bottom right hand corner, the high value, low complexity quadrant, you actually can spend quite a fair bit of your marketing dollars actually at the hot, just inviting people to contact you, get a free quote, free appraisal, whatever it is at that stage. But if you're in this top right hand corner, you're now dealing with something very complex, but it's also quite high value. It's an expensive item. So a financial planner, maybe 5 to 10K per year, and they're taking your retirement in their hands. And what's really important in this case is that you are really building trust with your customer. And you're going to have to spend a lot more time in that warm phase, education and engagement. You're going to have to give away your IP. You're going to have to be helpful and generous. And then people will come across who are trusting, loyal, great clients. On this top left-hand side, we're talking about things that are complex. Maybe an electrician comes to your house, they're doing something that you don't understand, and there's a level of trust there, but you're not spending a lot of money. Now, if an electrician messes up a PowerPoint for you and it costs you $200, it's annoying, but it's not the end of the world, in the way that a financial planner making a mistake could be a serious game changer for your life. So with this type of marketing, we tend to talk about, let's get you aware in the cold part of the funnel and then market again at the hot so that people know who you are, and then when they need you, bang, they can contact you. And then finally at the bottom, we've got fast-moving consumer goods. And mostly, because there's very low risk in purchasing here, you don't need to do a lot of sort of education, whether it's an iPhone case or a soft drink or whatever it is, a fairly low value item. You generally do a lot of your marketing at the top, a lot of cold marketing, just making people aware, and because they'll come down the funnel quite quickly. Now, where you are in this process may have shifted in COVID. It's possible you've moved a quadrant, and so the emphasis within that funnel now needs to change. It's possible you need to now do more top of funnel activity, or perhaps you can do more bottom of the funnel. Now, very quickly, the tactics, I've just put into 4 basic buckets. The first one is Google Ads. This is where you can pay to be shown in search. Now, what we've seen is that the Google Ads is continuing to work, but as confidence comes and goes, as we go in first and second waves, the actual lead volumes go up and down. What we're not seeing though is people aren't stopping buying. People are sometimes pause buying, and so you might get a bit of a scare in the news and things slow for 2 weeks, and then you get a rebound on the other side. In a lot of industries, the keywords haven't changed a whole lot. Possibly your messaging does. There's also the other options here around display and YouTube. which can fulfill different parts of the funnel. SEO is the same as it's always been. Maybe your keywords have changed, but in a lot of cases they haven't. Again, as confidence goes up and down, as we go through next normals, possibly you need to be creating new content, possibly you've got to be putting different calls to action on as you pivot. Your website is the quickest, easiest way to get quick wins out of whatever pivots you're doing. Social media is also one of the easiest ways to get a new message out there and test it with the market. If you've pivoted to something slightly different, you can try that messaging out on your customers and get immediate feedback as to whether it's going to stick with them, whether it works or not. And LinkedIn Sales Navigator, people still have needs in the B2B space, and the opportunity is still there for you to connect with them. Now, look, in terms of actually execution, so at the start we talked about the strategy, the tactics, and the execution. We then asked this strategic question around how do we set our business goals by talking to the right people, which we've covered, in the right time, with the right message. Finally, we come to this story framework, where what we're saying is that if you can get into your customers' lives and you look at your customer and always place them first, make them the hero, not you. You're not coming to save the day. They are going to save their day with your help. Place them as the hero, and then understand the storyline, understand their lives. If they're in lockdown, if they're been affected by COVID, if they've lost their job, all those sorts of things, if you understand their storyline, you're then able to speak to them in a totally relevant, real way, and then identify the problem, and then actually bring about the resolution and talk to them about the internal change, how that resolution makes them feel. So thank you for your time. Just quickly, if you would like to delve into any of these tactics further, we are running free workshops. You can come to our website, theonlineco.net. You can register for those. This is our attempt to help people in business during this time, knowing that a lot of people can't afford professional digital marketing. These workshops run every Wednesday at 10 a.m. Sydney time. We'd love to see you there. I hope this has been helpful, and we'll talk soon.
Thank you, James. Our next presenter today is Tachyon Systems. Tachyon helps software developers to develop software using any human natural languages like English, French, or Spanish, and learning computer languages to reduce their efforts and time by 50%. Here to talk further about this opportunity is founder Shan.
Hello, I'm Shan, founder and CEO of Tachyon Systems. Tachyon is developing B2B platform software. It's basically develop the softwares using a natural language, thereby reducing development effort, time, and cost at least by 50%, and increase the innovation speed by 2 to 3x of times. So what problem we are solving here? Currently, the software development is facing a lot of challenges. There are few important challenges here, like the software skills and technologies are keep on changing. What does it mean? It means difficult for software engineers to need to learn the software and skills all over again. The second one is the long delivery cycle. What does it mean? It takes more time than planned. That means it will impact the speed of innovation. And the third one is we have a high dependence on humans. That means we know very well humans comes with its own limitation in terms of time and learning. So this needs to be reduced. And then fourth one is many people are ignoring. That means the best practices is not a mandatory. It's became an optional one. That means it leads to high technical debt and then poor quality of softwares. So what I can say is the current state of software development is complex, time-consuming, error-prone, and inefficient. Okay, if you see that a programming language evolution, it started from 1833. Humans, we started coding through machine code, and then we moved to assembly language in the year 1950. After that, 1960 to till now, we are using high-level programming languages. There are 700 programming languages are still available. It's keep on increasing. This needs to be stopped, because as a human, we need to learn a lot of programming languages. It's become difficult and cumbersome to learn and adapt a new language. So what's the solution? We're introducing a Tachyon. Using a Tachyon, we can develop the software using any high-level languages, any high-level natural languages like English, Hungary, Romanian, or Italian. You can speak any language, and then we can develop the softwares. The main benefit is it's a speed, and then efficient, and then it's more convenient. That means going forward, software engineers no need to learn any new languages. Instead, computer will learn human languages to develop software application. If our solution involves multiple technologies, we are using natural languages for understanding the human natural languages, and also we are using computer vision algorithms to understand the software diagrams to convert into relevant programs, and also we are using machine learning algorithms for providing context-specific suggestions and recommendations, and also we are doing end-to-end complete intelligent automation. We are providing, and also we proactively apply security measures, best practices, and everything. Yeah, there be the benefits. For what we are doing is basically we are creating the intelligence to the software development, and also we are adding voice inputs to the software development, and also we are increasing human machine experience, and also increasing the speed of innovation. More importantly, we are increasing the project predictability, and also we are reducing the human dependency. Also, we are completely removing the reinventing the wheel, and also the feel of monotonous. Competition. The main distinction for Tachyon is we are using the natural language as one of the input for software development, and then Tachyon will develop the application with by default voice enabled. That means this is the first of its kind. We are introducing the natural language as an input, and also the application and the developed have the voice command by default. If you see the competitor landscape, Tachyon has an advantage in artificial intelligence. We are applying the artificial intelligence from the scratch, and also we are focusing on complete software development lifecycle. Whereas other competitors, they were applying the artificial intelligence not from the scratch. They are applying, but they cannot apply from the scratch because their product is already matured enough. It's very difficult to apply that artificial intelligence from scratch. This makes a bigger difference, a bigger impact to the product, because when you apply the artificial intelligence from the scratch, it'll change the total look and feel, and also it'll change the complete experience. The current market size is total global market size is 300 billion USD. In that, service available in Australia and New Zealand is 40 billion. In that, we are targeting just 2%, that is 800 million. Actually, Tachyon is a convergence of multiple high growth segment market like low code development platform, natural language processing, machine learning, computer vision, cyber security, and code quality. Here is our team. I have 17 years of experience in software engineering and artificial intelligence. I have worked for EMC Square, Capgemini, Cognizant, Australian Super, and Siemens. I'm holding international US patent. Our ask is we are looking for 900K to cover 10 months of expense with the exchange of 15% equity, or else we are looking for 1.8 million to cover 20 months with the exchange of 30% equity. Currently, Tachyon is valued at USD 6 million. This valuation is based on forecasted earnings and current work progress. We have almost completed the MVP. We are about to complete the MVP in a few months of time. And also, this is based on weighted average of multiple methods like scorecard, Becker's, DCF, and venture capital. The distribution of funds, we are using the 900K to cover 10 months of expense. It involves 600K for employee salaries, 100K for software licenses, and 100K for legal, accounting, sales, and marketing, and 50K for filing the international patents. We plan to make 2 to 3 patents, and also 50K for partnering and expansion. Here is our milestone. Briefly, our milestone is we are plan to deliver MVP by Q4 of this year, and then full release by next year of Q3, and then we plan to expand to global market by Q1 of 2022. So Yeah, at the moment, this is a milestone. Yeah. So this is a recognition. Yeah. Thank you.
Thank you, Shan. It's my pleasure to introduce the well-anticipated panel session for this showcase, centered around international trends. Here for the roundtable discussion is Amin Matni from Qatar Business Incubation Center, Irfan Malik from INQ Innovation Global, Dr. Ruchi Dana from FounderX, Jessica Wang from INP Capital, and then Burykin from Fastlane Solutions, our moderator. We will discuss trends from the Middle East, India, China, Canada, and the US.
I'm Dan Burykin. I'm a managing partner of Fastlane Solution, and I have experience in managing and investing in STEM businesses for the last 25 years. And I like doing this, and I'm here to moderate this panel and to share the experience with the community. I believe by sharing the experience with the community, we are making the community better, and we are creating more opportunities for everyone in this community. Right? The topic of our panel is the investment trends, international investment trends. And we have a very high-profile esteemed panelists today. I will let them introduce themselves in just a bit. But before that, I would like to encourage the audience that are listening to say hi in the comments and maybe put the name of the city that you are from, right? So it would be very interesting to see what the audience we have and address this later. So international trends, investment trends, there's been so much change. It's in a true sense, it's a true time of change or wind of change. There's been logistical patterns changing, procurement patterns changing, geopolitical changes, reassessment of investment risk around the globe by all the different investors, groups of investors, and many other reasons. Partnerships being challenged, right? So here we are. We have our panelists from many different countries, and I would like to give an opportunity for them to introduce. Please introduce yourself, say your name, and maybe tell us your motto, your personal motto as well. So I would like to start with the ladies first, of course. Ruchi, over to you.
Sure. Hi, everybody. I'm Dr. Ruchi Dana. I'm a medical doctor and a Stanford MBA. I'm logged in here from Dubai, and I represent Dana Family Office. We make direct investments into startups and various other asset classes. I mainly look at investments into startups and some pre-IPO deals. I'm really looking forward to this session. Thank you so much, Dan, for inviting.
Thank you, Ruchi. And what would be your motto, personal motto?
So I always believe like to be like excellent in everything. So like sort of like excellence in execution, that would be my motto.
Thank you, Ruchi. And Jessica?
Yes, sure. Hi, my name is Jessica Wang. I'm a partner at INP Capital in Canada. INP Capital is a venture capital firm with offices and networks in Canada and North America, Australia, China, and Europe. Our vision is to combine extensive investment expertise, wide international network, and deep industry experience in empowering entrepreneurs to achieve best-in-class businesses and provide investors with extraordinary returns. Our motto is actually, I'll give you our firm's motto, is to invest out unicorns. So, we not only try and identify the companies with disruptive technology, but also, we strive to work with them and grow with them in a vast runway that we think has huge potential.
Very profitable, I'm sure.
Trying. There's some good news. Yeah.
Yeah. Irfan, if I may.
Thank you, Dan. My name is Irfan Malik. I'm the global CEO of InQ Innovation. We are a global open innovation ecosystem incubator accelerator program headquartered at the Sydney Startup Hub here in Australia. And I've been here in Australia for the last 20 plus years. We've got our branch offices in India, a strong footprint there in India across 3 cities there and growing, including Cochin, Bangalore, and Mumbai, and also a strong presence in Singapore and a growing presence in Dubai as part of our Middle East. We call that as part of the extended Indian ecosystem, both Singapore and Dubai. We obviously have run quite a lot of cohorts of incubator programs as well as accelerator, and we've changed the model quite a bit. Now I'm focusing quite a lot on the Australia-India innovation bridge space across connecting the ecosystem. That includes the startups, the founders, the incubator CEOs, the GAF innovation agencies, but also the strong investor connect, and definitely keen to look forward to really facilitating wholesale investors and crisp platforms like that as well to have access to India. Been hands-on, deeply involved in curating great successful startups. My motto and vision definitely drive is to really focus on impactful investments, not purely social impact, but creating high growth ventures and investments at the right time with the right kind of strategic investment partners to help curate those high growth ventures. And we invest. We have got our fund as well, which we invest in pre-Series A to early stage pre-Series A to pre-IPO stage. Focus a lot between pre-Series A and Series B, Series C investment. And our focus also is to look for co-investment opportunities where the impact is double and work alongside with government as well. That's me, Irfan Malik, and look forward to this great, exciting session and sharing my insights as well, connected with you all. Thank you.
Thank you. It feels like your day will never be so much happening there. Yeah. Amin.
Good morning, everybody. Thank you for having us today. My name is Amin Matni, and I'm heading programs at Qatar Business Incubation Center. I have a couple of roles under the establishment. The first one is head of training. So I train startups from idea stage or once they are in the market live and they pick up pace and to achieve product market fit. The second role that I have is I'm heading the digital incubator under the incubator, being a mixed incubator, Cubic. And that is in partnership with the telco Ooredoo. We have a fund, and I manage that fund to help startup at early stage, pre-seed and seed. And the third role that I put is I'm an angel, always scouting for interesting gigs, just to keep us alive, practitioners.
Thank you very much, Amin. And what is your personal motto in all of it?
I tell my kids and my startup the same thing, no dilly-dally. Whether persevere, whether pivot or drop it.
Yeah, that's very good. Straight to the point. All right. Look, it's really great to have so diversified representation here today from different areas, from different perspectives. And that's what our audience is really interested to understand, right? To understand what's happening, what's changing, why. So my first question will be very much the same, general for everyone, but we'll try to go around the table, starting with Amin, possibly as first. Working in this business incubating center, that is, I understand, is one of the largest in the Middle East in your area. So you are certainly observing changes and trends, right? what kind of new startups or new business ideas, maybe not new, but maybe new in terms of size or some other type of products, industry segments, what are you observing in the last, say, 6 to 12 months coming from starting in your area?
Thank you. I mean, identifying the trends, it's an ongoing thing. We saw a big hype in the beginning once the Uber, the Uber Eat and all the international brands that came out in expansion in the region took a hype and influenced the startups. So we saw a follow trend towards those. But later on and lately, we've seen vertical focus in health tech, driven by IoT, blockchain, deep tech, fintech is growing big time here. And we just roll out in part of Qatar Development Bank, a fintech incubator and a sports tech incubator. So the diversification of the portfolio under the development bank has been triggering focus areas. And we've seen the startups responding. We've seen the professionals in the market responding to that.
It sounds like a lot of focus on tech in across different segments at the same time. Is there any particular change to the investors' behavior or to the founders' behavior in the last 6 to 12 months among those?
Indeed, I mean, this is weird time, and what we try to do with our cohorts is to sustain them and to keep our network of angels and VCs alive through virtual touch points. And that is important to, first of all, sustain the portfolio and trigger new opportunities that per se are short-lived. Those business models triggered by COVID might not sustain, but they're good. And some of the new pivots of existing startups benefited from those circumstances to monetize on them and provide value for customers and the market. As you know, there's a huge cautiousness between the startups to manage their runways, and from the investors not to go on a hype that is short-lived. So some quick wins happened, but nevertheless, the angels and VCs look at long-term returns. So it's a weird time, but now towards normalization, a new normal, we see things are coming alive towards long-term visions rather than short-lived gigs.
Well, I hope that will definitely bring benefits to the community, to the investors, and the founders. The focus on the healthy foundations and the long-term view at the same time can be tricky to combine. Yeah. Yeah. Thank you, Amin. Irfan, you're working across several jurisdictions. You're working across several countries. So, what trends do you see coming recently out of your Indian startup community?
Yeah, great. I think this is, one of the best opportunities I see for Indian startups. Obviously, over the last 5 to 6 years, I've been operating in both India and Australian ecosystem and Dubai as well. I've been investing into various startups myself. And as we been running these programs, we've been also curating global market access program for some of these startups, especially out of India and also Australia. This obviously COVID has been a game changer for almost all the ecosystems, but most importantly for India, this has been a major reset, and it's actually transformed the opportunities. Some sectors are huge, obviously medtech, pharma tech being great, and also the geopolitical situation also making India kind of a great partner to look out for. An aligned partner to look out for. That's opened up huge opportunities for startups. Naturally, startups can react or respond to opportunities much quicker than larger corporates. And hence, startups are all taking up the mantle. And I've seen some amazing ideas being curated, fast-tracked with obviously support from government and various ecosystem partners there. What's been great is to see some amazing ideas and startups accelerated from tier 2, tier 3 cities. It's not the Bangalores, it's not the Hyderabad, it's not the Delhi and Chennai. It's also from smaller cities that they are emerging, and they're emerging with a global outlook as well. And this is something which even investors are taking a cue, and we are actively working with those emerging opportunities. There's some great opportunities in agri-tech, like future of farming using AI, blockchain, and all. Great story for, of course, Australia also is a great farming nation. So there's a lot of synergies possible, and I'm seeing a great trend there. From an investor perspective as well, obviously, I see whilst all of them are trying to protect and sustain their portfolio of investments, but I'm seeing a lot more co-investment opportunities. People are looking to work alongside with government, various funds or fund of funds as well. So huge opportunity and trends I'm seeing. Of course, as I said, medtech, agri-tech, defense tech, pharma tech. Some of these sectors are going through a huge growth in India, and also opportunities for Australian companies or investors as well as startups to look for collaboration. And I always look at Singapore and Dubai and the Middle East as part of the extended Indian ecosystem, both from consumption perspective but also investor perspective. I'm sure in Qatar and Dubai, some of the startups have got presence or some kind of a collaboration going on with India as well. So I think the whole region is going to be benefiting a lot. And of course, the government is also driving a lot of aligned programs. I think it's an exciting space to watch. And I would strongly recommend working with ecosystem partners who can leverage access, but also deliver some of those market access outcomes as well, which is what we're looking to achieve.
Thank you. I think I will ask the questions that is on everyone's mind. It is very sad and very unfortunate to see that the COVID trend currently rolling up across India. How do you see this impacting or not maybe impacting too much the investment and startup community that you are involved in?
Yeah.
What do you see? How's that? From your experience.
So from my perspective, I have obviously the first couple of months. So in fact, I was in India, February, March in India and Dubai as part of a trade delegation, and we were doing a lot of market access program. And then COVID hit early in March, and obviously the first few months was about just to gauge how bad can this get? How do we really deal with this? And no one's seen this has been unprecedented and stuff. So I think it was a bit of a lying low, and making yourself stable, make yourself safe, be healthy and stuff, protect the team and things like that for I think the first couple of months. But since late May, where people have realized this is the new norm, we're connected digitally, and everyone's on Zoom, and big deals are being done on Zoom. So I think people are getting used to it. So from an investor perspective, obviously, as I said, it was about protecting the portfolio of investment, but also look at new opportunities. What I've definitely seen change. This has been traditional Indian investors, kind of theme of definitely focusing on revenues and business growth was definitely there. Not just that you've got a great client base or you've got a great market access and your balance sheet doesn't look good. It's also about generating revenue and also your flexibility to pivot and look at opportunities. Some of our startups that our investment portfolio, they've done some amazing things over this period. Whether it's for cybersecurity, medtech, pharma tech, and agri-tech, and they've accelerated. In fact, and I'm seeing more and more global play happening and global collaboration. The startups are looking to go global or think going global much early in the game rather than waiting for 2-3 years. They're looking at within under a year. They're thinking about parallel markets to validate their product or solution, validate their customer base there, as well as investor validation as well. They are looking at, and I'm seeing a lot of it. And of course, the investors are also conscious that it's also about sales, distribution partners, how it's not about what is the ask and how much. It's also when, how that's going to be deployed and what outcomes will be delivered as well. So there are more active interest. And also I've seen a lot more strategic investment plays. So for example, Australian investors are or Australian startups looking at India to collaborate. They're also looking at Indian investors where they will not only invest in these entities, but also become strategic investors for either for manufacturing partnership or sales or distribution partnership, which with their network they can offer. So I'm seeing a lot of dynamics in play, and of course with support from government, which is really activated right from the helm top down, and also individually states vying as well, and similar play in Australia as well, where there's initial days of gloom, but yeah, people are coming to terms and they're looking for new ways. And I think this Australia-India dynamics, both geopolitical and market opportunity, presents great opportunity for both these ecosystems to leverage. And of course, yeah, I'm looking at Singapore, Dubai, Qatar ecosystems to also benefit from that growth.
It's here that our startup community is adopting quickly and coming up with innovative counteraction. If we call it COVID an action on a system, then there is always a counteraction for. I think that's great. Jessica, in your experience, what are the investment trends that you potentially observe emerging? Maybe if I can narrow it down between Canada and China, it's always an interesting aspect, or maybe other angles of your business.
Yeah, I guess between Canada and China, it's a bit sensitive time right now, albeit all the political things that's happening. There's actually, interestingly, China is one of the first country that effectively controlled COVID and have pretty much throughout the have pretty much throughout the whole country now reopened their economy and coming back. And Canada is right now, like here in BC, we're in a bit better situation, but overall, we'd say Canada has also done incredibly well in controlling COVID, and so to a certain extent, it has not hugely affected the startup community, but COVID to I guess in the eyes of Canadian entrepreneurs and as well as Chinese entrepreneurs, COVID really is more of a catalyst. So it actually sped up the digitization and development of certain areas. For example, China is right now going through huge, rapid reformation in, and moving into their more advanced manufacturing field. Because of the trade relationship, they have somewhat scaled back from, like the traditional sort of manufacturing exporting to the U.S. And then right now there's a huge appetite inside of the country looking for higher tech opportunities, technologies that's in, fintech, e-commerce, in health science, biotech, and as well as clean tech and renewable energies. Those are the areas that there are a lot of enterprise money actually looking. And because and here Canada actually has a somewhat I think Canada has an advantage in terms of our more diverse and open culture, where we have a lot of and we have a very open immigration policy where there are a lot of talents. It attracts talents from all over the world. Developers from the Middle East or from Russia, from India, that was having a hard time getting their visa to the U.S. There's a lot of those people that ended up coming to Canada. So there's a really good environment for innovation. And there's a lot of startup companies, technologies in those areas that I highlighted. So I think actually for those companies, and this is a shout out to really, I think all of the global company startups companies, because China would be a great ground to expand your market right now. Because there's huge capital there, there's great appetite. However, because of the geopolitical issues, those capitals are not really very actively going out to the U.S. and so on. So if you could go to them, right now might be actually a great time.
So maybe Wholesale investor can help with solving some of that, right?
Oh, no, absolutely. Yeah.
Yeah, thank you very much, Jessica. I do have a lot of other questions, but I want to hear out Ruchi's perspective as well. Ruchi, you have quite an interesting mix of experience and involvement as well. In New York City and in Middle East, right? And in some other communities. What trends do you see from that angle?
Sure. So I'm really excited about the startup ecosystem in the Middle East because it's just growing exponentially right now. Because there were some recent acquisitions. For example, Souk was bought over by Amazon, and then Careem was bought over by Uber for over $3 billion, and that was very recent. So that's why the young generation is so motivated right now to do something on their own, and that's really exciting. And the best part is that the government is supporting quite a lot, and the government is actually going out of the way to support entrepreneurs and to support the startups, and in terms of even the funding. And one of the key challenges that I see in the Middle East is that there's at times lack of talent. And because as Jessica was correctly saying that once you get a lot of access to talent, then startups could immediately flourish in that with the help of that talent. So the government is doing a very good job in that sense as well. So they have actually started a matching program in which they can even match the funds that a VC raises. So when a VC is raising a fund, he can actually come to Abu Dhabi and then set up a fund here, and then the government can match a part of it. So that actually helps the VCs to come to the Middle East as well. And once the VCs come, the startups would come, and so that's how the talent would actually come to the Middle East. So Middle East is a good place, but in terms of talent, things have been a little down because also in terms of deep tech, there are not many startups here in the Middle East because it's from the universities that there's some researchers coming out and some good talent that comes out of universities. Those are the people that actually start deep tech startups. So again, for that, the government is taking some good initiatives. Just last week I was on a panel of a deep tech startup showcase by the NYU University. So that was exciting. It's good to see a lot of deep tech startups coming out of this region and a lot of talent inflowing into this region. So that's really exciting. In terms of COVID, I can see the main trends are again in ed tech and in life science, med tech. And for me personally, that's a good thing because I'm a doctor, so I get to see all these interesting companies. And in fact, we invested in a couple of companies after COVID-19, and they were again mainly in the healthcare space. But it's good to see. The sad thing is that if you look at other startups, even worldwide, the valuations are sort of going down, and there's a sort of many down rounds happening. But in terms of healthcare, we still have to pay the high valuation because healthcare is getting the right tailwinds and it's blooming right now. So that's what we focus mainly on med tech and digital health and life science, biotech. So those are the startups that I'm really excited about, and a lot of attention is going to them, even from the government sides and from the incubators. And also it's exciting time, and these are startups that can actually bring about an impact as well. So that's the good thing.
And what would you say about this interesting fact that Irfan and Amin actually pointed at, a slight, or maybe not slight shift to strategic longer investment horizons. Do you see the same happening in your area?
Yeah. Yeah, so suddenly, like even a lot of family offices have started to invest into startups, and family offices are mainly like patient capital. And the reason for those investments is again like because of these good exits that this region gave. Everybody is so excited. Even the next generation of family business people, they are really excited about startups, and they have started to make these investments. And the family office investments are mainly like patient capital, long term, and they also care a lot about impact. So that's again a good thing. So instead of like being driven by the VCs to like just bump up the valuation and all, family offices are much more patient, and they care more about the impact that startup would bring even to the various lives of people. And like maybe even like some of these families also like sort of incubate the startup, and then like once it gets ready, they even acquire it. And I think that's again a good model, because oftentimes innovation in a business comes from outside, so it's not possible for the in-house team to think out of the box ideas. So it's a good thing that like you can actually like seed a startup, and then like once it gets to a mature stage, you can actually help incorporate it within the company itself. That's a new thing that we are seeing here.
Okay, thank you, Ruchi. Jessica, what about you? Are you noticing this shift towards longer investment horizons, or some longer commitments from the investors into the startup community?
I would say it depends on the different fields. In fact, we're actually seeing sort of a shorter period, not in terms of expectations of angels and venture capitals, but in terms of the time that startup companies take to become unicorns potentially. So that cycle has, because it used to be, you gotta really have the patience for at least 5, 7, 9, 10 years to actually invest out a unicorn. But recently, when we look at the trend, there's a speeding up in terms of like how industries are transforming, and how the technology is really disrupting like certain traditional industry and sectors, and companies could emerge really like within very short period of time and become a unicorn in a little less than 5 years, 3 years. So that's obviously encouraging news, I think, for investors like us. We gotta have the patience, but it seems that your patience are getting paid off faster. So.
Yeah, hopefully, right? Thank you. Thanks for that perspective. I mean, say I'm a founder. I have an idea, or maybe I have in revenue startup. Why would I come to yourself? Why would I come to your business center?
I think being based in Qatar, there is key stakeholders that operate in the country. And from Business Incubation Center is owned by Qatar Development Bank. So from the first hand, you see that the alignment of follow-up investment is already laid out to the startup. The second thing, being catered by the needed knowledge and tools, the needed network, the needed infrastructure, and pre-seed, seed, laid up for the startup is important. Access to local investors where we do investor series. And also we help the startups to showcase overseas, to peak in adjacent markets. So it's a good platform to help them de-risk their business models and do follow-up investments. Having partnerships on a national level with key stakeholders will open up doors for them and will subsidize a lot of expenses, which is key for a startup at early stage.
Absolutely. And in your mentorship or trainer roles that you introduced earlier, what would be the top 3 advices that you can give to right now to the founders?
Assume nothing. I think this is the first thing that we always tell them, that our opinion and their opinion doesn't matter. What we care about is to do sprints and validate in the market what hots and what not for the customer's perspective. The second advice is that put them is speed. It's important to have speed in market and execute and understand what matters to their business model to achieve a repeatable and scalable business model. And the third one definitely is always getting the right people on board, having the right synergies, shared vision, and the true passion to go this roller coaster, because nothing is easy at these stages. There's a lot of challenges for a startup, and being agile mentally and on the ground is important, deeply important for them.
Thank you. I mean, I hope the founders will listen to that. From my experience, these are definitely very, very useful, practically useful advices. So thank you for sharing your experience with us. Irfan, from your experience in Australian and Indian community and facilitating these businesses, what can you recommend to the founders from India trying to enter the Australian market, working with Australian investors?
Yeah, I think as many of the political leaders and also various government officials have been reiterating in the last 2-3 months, there's been never a great time in terms of Australia-India relationship and opportunities. We just had recently, last month, a virtual summit between both the prime ministers of Australia and India as well, and that's just taking strength to strength, I suppose. So obviously opportunity is great. And there are sectors where both Australia and India want to collaborate. I always say part of this whole Australia-India bridge, India presents a great opportunity for Australian startups because obviously they just mere entry into Indian market, the sheer size of the market, gets the valuation through the roof, but also opportunity to scale is beyond kind of imagination. Plus, you can look at synergies, partnerships in manufacturing or scaling up opportunities. And it's a great launch pad for an Australian startup in India before targeting the rest of Asia or Middle East or looking at Europe or US. And vice versa. Australia is a great market to be a soft landing, kind of a market for Indian startups before they think big and look at markets like US, because it's kind of a perfect market where they can do client validation or the customer validation. They can do the market validation, the right size of market to validate your scalable solution, and also investor validation. So before you go and reach out to New York and your San Francisco based investors, I think this is a great market to really validate, grow, and then scale as well. So it's a great opportunity for Indian startups. More so, my outlook is definitely focusing on sales and distribution, global outlook, having global partnerships early in the game itself, which is going to really give the startups the trajectory that they will be looking for. Lead up to everyone. All the startups can't be unicorns, but definitely give that high growth venture scale up trajectory, and that's where they need to look for global outlook and global partners as well. And of course, definitely platforms like Wholesale Investors and CRISP. It presents a great opportunity where now they are exposed to a larger pool of investors globally. And of course, once they are vetted and validated for these target markets, access to capital and investment is huge, and hence that can help them grow. And my always, in fact, I'm working with some Indian startups, amazing stories. But it's also when I'm looking at launching them, I'm launching a few startups in the next weeks to come in medtech, cybersecurity, in agri-tech, and some in the hot space of PPE and medical and pharma space. It's important to really position your product, but also, being conscious of obviously, the product feature, but also certain elements of design, how you're positioning your product at a global level. It's all very little things, but it does matter. And of course, working with the right partners as well in the target market makes a huge difference in terms of giving you that acceleration. So definitely trying to facilitate this Australia Bridge program with market access programs where various ecosystem partners, including the government and investor ecosystem and the incubator, all of them are coming together to really assist helping companies scale and scaling up earlier rather than waiting till late. So that's what we are working through.
Thank you. For me, you are making one of the interesting points about soft launch of the Indian business, right, in leveraging mature Australian market. And this is really a great opportunity in terms of multiples. Of course, it is higher risk reward, but it's a great opportunity in terms of multiples for Australian early stage investors or whoever is involved. And it's not just Australian, it can be pretty much that concept might be working all over the world. Jessica, if I may ask you, in your role being involved working with high wealth individuals and investors, what maybe 3 areas of advice, categories of advice can you give these people right now? What should they look for, or maybe something from your experience?
Sure. Well, I would say number one is always people, right? So when you are looking at no matter what technology or what sector, you gotta look at the team to see whether they have the right sort of the elements, having the vision, the execution, the team alignment, their unique ability, and so on. So I think that because basically when you find a good team that's dedicated, that's just 100% on whatever they're doing, frankly, you almost can't go wrong. They create something and they get it done. They'll make it work. So to find the right team definitely is the most important. Number two, I'd say look at the you gotta have the foresight. So look where the industry where our world is going, because you want to be on a emerging industry, a market that's big, that has great growth potential, that potentially could fit many players in there. So once you identify a good company in there, they have a better chance of succeeding. And lastly, I guess know yourself, because that's I found, because every single person, we have our preferences, and myself, for example, I'm a eternal optimist. So I look at every single startup business and I think, oh, this could work. But obviously, I cannot be the one that does the risk control for our team. So, so if you are looking at, especially investing in early stage startup companies, private equity, venture capital, it's a high risk, very limited liquidity. So you wanted to, number one, diversify, and number two, find someone with the expertise that complements you. So.
Great advice, sir. By the way, do you imply that a lot of investors are optimists by nature?
Well, it's interesting. I think it's half-half. It's for example, in our team, we have 2 ex-PwC auditors who are just internally, like conservatism, and the first thing. So it's great to have people like that on your team. when we look at a company, I'd be working on their on their business development, on their market expansion, on their potential. My partners could look at their financial model and see how things could go wrong, and where it could go wrong, and what potential problem there could have. And when you combine that together, you get a much better picture of the company that you're looking for, and you will it will increase your odds.
Of course, thank you, Jessica. Ruchi, I saved this one for the last. I just want to maybe draw special attention to this. From your experience with the women in the business and especially with the founders, right? What advice would you give them, right? Especially in this difficult time.
Yeah, thank you, Dan, for that question. That question is something that's very close to my heart as well, because I've seen a number of women face a lot of trouble in raising funds and even making the right mindset to actually start a company. First of all, I would say this is the perfect time to start a company, because this is a bad crisis situation, but also there are so many new opportunities that can come across, the whole culture of working from home. It can give some extra time to people, and the whole culture of actually working from home is making the men realize how hard it is to actually tackle the children and multitask all the way. So I can see even in terms of corporate jobs and all, I can see a lot of policies would change, I think, for as a whole, because everybody is now aware of the how work can be done at home. So that's one thing. So I think it's a good time to start. Apart from that, in terms of raising funds, I would say one of the good things right now is that there are a number of business relief packages, number of grants that are available specifically for COVID-19 startups and even otherwise for SMEs. So it's best to take advantage of those and to maybe have an Excel sheet with all the deadlines in one place, and then take a weekend out and apply to all of those grants in one go, because that makes the entire system much more efficient, because otherwise it will become overwhelming. But it's really useful to apply to all of these opportunities that you get, because these are non-dilutive sources of capital, and that can help your company in a long run as well. And that shows that you actually put in the hard work, and that could help in the next round of fundings as well. So I think at this point of time, the most relevant advice would be if you're thinking about starting a startup, just go with it and start it. And the next round, about funding, it's good to actually take advantage of the situation and apply for the grants, competitions, prizes, business relief packages, because this is how a company can actually weather the crisis right now, and it will show good in terms of raising the next round as well. So that's what I feel. And the good thing is that there are a number of women angel networks now arising in almost all the geographies, and they're actually helping quite a lot. And even women who are doing their corporate jobs and all, they're also doing a lot of more angel investments right now. So that's again a good way to actually look for capital. And in the last, I would just say that this is a quote by Oprah Winfrey: "You get in life what you have the courage to ask for." So just don't be shy of asking for help or asking for any introduction and all. The worst that could happen is somebody would say no, but that's not the end of anything, right? But it's important to take advantage of the situation.
Thank you, Ruchi. Thank you very much. I really hope that advice will be taken on board, and it certainly resonates with, in my experience, very practical nature of those women entrepreneurs that I know of, right? So thank you for sharing that, and thank you for supporting that community as well. From my understanding, you're very active in that role as well. So it's really, exciting to have everyone today, and it is really sad for me to notice that we are running out of time, because I really want to talk, and I have more questions. So maybe later on there will be an opportunity to connect and to discuss online and virtually. So thank you, everyone. Thank you, Amin. Thank you, Irfan. Thank you, Jessica and Ruchi. Thank you for participating in today's panel and sharing your experience.
Thank you. Namaskar. Thank you.
Thank you. Pleasure meeting everybody.
Cheers. Thank you.
Well, I hope you've enjoyed today's content and I hope you've got some take-home value for it. Today is the whole venture and capital experience for us is something that's so powerful because for us, it's all about how do we bring together innovative companies and capital. That is where the magic happens. If you look at all the great innovations and all the great inventions in history, that is where it is all started. So the next step for you to take from here is go back through the companies which are presented. We've made it super easy with the stream page, and then start initiating contact with them and then start exploring those discussions. Because what's been beautiful is that we are seeing so many incredible connections and amazing things that are taking place from the work that's happening within our ecosystem. And we want to do everything we can to facilitate that. You are an incredibly important part of this for us. So thank you again for joining us for Venture and Capital. We look forward to hosting you again next time.